Hello, everyone. Welcome back to the Brain Trust, episode 73, Economics, um, 10/12/2018. I have my co-facilitators with me, Lionel and Anti-Gravity.
Hello, how's everyone doing today?
I'm good, man. You?
I am great.
Good. I see Anti-Gravity might be away. Um, so what we're going to talk about tonight is basically the Turkish African Forum on Business and Trade, as well as several blockchain articles. The main focus tonight would be um, or at least we're going to start off tonight with the Turkish African Forum. So let me share my screen. Make sure I present to everyone. So Turkey decided to have a forum with the African Union and members of the continent. This is about trade between Turkey and Africa, creating 80,000 jobs, $20 billion in revenue um, between the two in trade, as well as something I didn't know myself was that they do the most projects on the continent, even comparing themselves to China. So there's a lot of money flowing back and forth, something that we should be getting on top of in terms of black men and black Americans. I know what you take from this.
Me personally, I did not know that they do the most projects either. The video they said they do since I forgot what specific year they said they did 1,150 projects throughout the continent, and Turkish Airlines fly to 54 destinations in Africa, the most I guess non-African airline, foreign airline in the world that does that. I just like seeing the video. The Turkey Africa trade reached nearly 19 billion in 2017. I like I said, I think trade is good. I'm not bashing trade or anything. It's per the the track record. Um, I just want African leaders to have more of a stand and say, okay, you are investing in Africa, and these are the guidelines. If you can't follow these, we don't do trade. That's my feeling. But trade is good. Trade is good.
They do 1/5 of the trade between Turkey and Africa that the United States does with Africa. So I think the United States does something like 100 billion, if I remember correctly, something to that effect, 100 billion. Whereas uh, China does something like 5 to 600 billion dollars in trade per year. So there's money to the there's money floating around, and there's a lot of opportunities that's going to come from that. And I think that it'd be interesting if black people, especially black men, can actually establish trade with Africa as well. It'll be, won't be billions of dollars, but it could be millions, right? Um,
Hmm.
so we know shea butter and those type of cosmetic products are going back and forth. We know a lot of your hoteppers buy a lot of dashikis from Africa too. So maybe they consider that trade as well.
And I agree, to with the trade. Yeah, black men do. We're not saying black men don't do trade with Africa, but not enough is doing trade in Africa to uh, that we know of. And black men should do more trade with not only West Africa, but different parts and personally every country in Africa. Um, that way we can, like you've beat the horn before in the past, that can increase our political presence, increase our political power. it doesn't matter. You say shadeboard and dashiki, okay, do that. On top
Mhm.
of every other thing, agriculture, technology, and any other thing that we as black men in the Western Hemisphere, not just Black Americans, but Afro Canadians, Bahamians, Caribbean, even Afro Brazilian, we can do trade with Africa to
Right,
anything we can do, get our hands on to trade with Africa.
right. Noah, do you have anything you want to add to this? I'm not sure if he's stuck or he's just away.
Mm.
But
Uh,
Turkey seems very benevolent in this whole entire prospect. It's not like, oh, Turkey came here and they they're beating the Africans and they're just taking land and resources away from them. No, they're creating 80,000 jobs.
mhm, mhm.
That's a lot of people working.
Yeah, it is. It is, and not only just the 80,000 jobs, but the people that account for those that one of those numbers for 80,000 jobs, they may start a business with the money they're getting from those jobs and hire other Africans. So the residual effects of that, and the type of drum I've been beating is you can't, for African leaders, I want them to do more. No matter how much Black Americans say, "Oh, African people this," trust me, a lot of us look up to them as same as they look up to us. I
Hmm.
just get the feeling that they go into a deal thinking that the other person that they're doing, other foreign country they're doing business with, comes in benevolent. You can't go in thinking, oh, they are a benevolent person coming in. No, they have to show you. So that's my only thing. But trade is
Well, see,
good.
I think, yeah, I think the problem is that um, a lot of the African countries don't know what to do with the resources per se because they're not the ones utilizing it fully, right? So you
Mm,
take something like cobalt or some of these cobalt used for batteries inside smartphones and laptops. That's a huge market.
yes, it
That's
is.
a multi-billion-dollar market in itself. And Apple says we want those resources and we'll do anything to get those resources. So right now they're fighting in the Congo to get these resources. Um, so what I'm saying here is before I think African Americans or black men or black Americans can actually critique trade in Africa between other countries and nation states, I think it's incumbent upon us to actually organize first as a group, and then approach Africa with trade trade priorities between Black America and the continent itself. Because I do think one of our biggest exports, if not our only export, is hip hop. Right, the culture itself is very profitable,
Hmm.
and we export that all over the world. Breakdancing, the MCing, the DJing, the fashion. Everybody wants to dress like us. Everybody wants to be like us. They want to use our slang. They want all of the the haircuts and stuff like that. They want the whole entire culture, and the culture is very profitable. But for whatever reason, um, we allowed outside forces to get involved and interfere in in our way of life, because that's what culture is, a way of life,
Hmm.
and we allowed to hijack it and monopolize our and capitalize off our off our only export.
Yeah, and I agree with you. We and I critique them. Yes, I do. But you have a very valid point. We do need to approach them on a trade level and say, hey, we are black men of America. We want to do trade with you in this area or this or that area. And I agree.
Hmm. We have something called the Black Chamber of Commerce, and I'm pretty sure Dollar Will has a could probably speak to this because he's in D.C. if I remember correctly, or he's from D.C. But Black Chamber of Commerce seems to be the only staple in terms of doing business for Black Americans from a grassroots standpoint. So I think that we need to take it one step further and say, well, we 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 need to fund startups. We need to fund black men who have ideas, black men who need other, who want to hire other black men. But in this country, you really can't just hire a all black. You can't just have an all black company. You can't just hire black. You know, if you start to discriminate, there's all types of policies in place that stop you from discriminating, from hiring other people.
Mhm.
But my main point here is um, how we would approach something like this would be from everybody operates as an independent contractor with each other um, under a limited liability corporation or LLC.
Yes, yeah, yeah. There's ways, like you just mentioned, there's ways around it. Well, I just mentioned there's ways around it. Limited liability corporation. There's ways,
Partnership.
but right, right. But we just have to get to it, and I don't just want to talk about it. There are black men, and they're here on YouTube, and even other black men that don't broadcast, and they go to Africa. They're there. Two that comes off the top of my head is the Ghana Dan and Dynas. Search for Uhuru. They are there. They can give us insight currently on the ground of what's going on and what we can do.
Right. And what I'm thinking when I say export, the exportation of goods to Africa. Africa has a huge problem with infrastructure development, digital infrastructure. I mean, you and I have talked about blockchain a lot, but that's an area that Africa can actually benefit from, and it's not going to take a whole lot of huge labor. I think we discussed this before, that blockchain can, for every blockchain developer, there's going to be 16 opportunities that come out of that developer's creation
Hmm.
on the blockchain itself. So there's opportunities there, that can be created, that's not actually you know that doesn't require physical travel, right? So you don't have to actually be on the ground. You can actually do
Correct.
it from your place in Chicago or New York or DC or something like that. Although it probably would behoove you to actually travel over there to see what's going on the ground, to actually have some face to face time for doing business.
Hmm. Hmm. Yeah. All right. I think, yeah.
Wait, are you guys still talking about the first Africa video?
Yes.
Yes.
Okay. The one thing I would say about that is that at least maybe this is just my speculation, but it looks like Turkey is trying to return to its old roots as the Ottoman Empire, right? So
Mhm.
I think at first they have to, bury the hatchet with the Kurds, but they're trying to break away from Europe. Definitely, I think that's the clearest thing that um, can be seen from this, especially the part where they talked about the currencies, paying each other in local currencies instead of euros or dollars in terms of international trade.
That's a very good point.
Mhm.
And I don't. I'm wondering why you say he wants to return back to his Ottoman Empire um, sort of days of the past. Why do you say that, Anti Gravity?
Mostly because after uh, the Ottoman Empire fell, there was a guy named Ataturk, the first president of Turkey. He put a lot of limits on the the Islamic religion there in that country, kind of westernized Turkey to be more as a European country than as a Muslim country. But ever since you know Erdogan took over, he's really emboldened a lot of the how do you say, I guess, the religious rights over there, and he has a pretty strong power base and has been networking with a lot of Muslim countries to kind of be like the figurehead or the leaders, right? So his outreach work in Somalia, a lot of stuff he's doing in Africa, as well as his outreach to Malaysia and Indonesia, the world's largest, or Indonesia is the world's largest Muslim country, as well as Pakistan. So he's making a move to the east, and Africa, and away from Europe per se, to build his the economic base of Turkey. So that's where I see kind of, as well as his shadow war with Iran and Saudi Arabia and Israel. But Israel and Saudi Arabia have this alliance. It's pretty sick. I don't know how Saudi Arabia and Israel could be in an alliance over anything, but he's trying to.
Well, because they,
Sure. Oh, go ahead.
no, I was just going to say that Israel, Saudi Arabia needs Israel to survive.
Right.
They have.
No, I understand what why they're doing it, but I'm just saying it doesn't make them look good. So he's trying to position himself as, we're Turkey. We're trying to go into the future, and help the Muslim countries move away from the West, because the West is corrupt, et cetera, et cetera. The kind of points he makes, but then at the same time he's trying to show himself to be the opposite of like the corrupt, hedonist, Gulf states. So that's where I see kind of the Ottoman angle. Personally, he's trying to, I guess, in a way, unshackle Turkey from the chains of Ataturk, right? With a lot of his moves, abolishing certain things in the Turkish constitution, emboldening his religious base. That's where I see it.
Well, I would push back just a little bit to say that I don't think he's trying to get away from Europe, right? I think they've been pushing their luck to get inside the European Union, because they do major trade with the European Union. I think something to $80 to $100 billion a year in trade, which is nothing to sneeze at from a trade perspective. That's a lot. That's a lot of money they do. They do more business in trade with the European Union than they do with the United States. I think with the United States they do something like $5 to $9 billion a year in trade, whereas with Europe and Russia they do $100 billion in trade. So there's a definite strategic advantage to working with the European Union and actually being an observer member, if not a full member of the European Union.
Right.
So what you mentioned earlier about the currencies, the local currencies that their suggestion that the Africans should use, that bolsters the strength of those African countries: Tunisia, Morocco, Senegal. Those Somalia is another one. We see them laying down airports, a lot of roadway, highways, expressways, and stuff like that. Advancing Somalia. If you go back to Somalia 10 years ago, Mogadishu was
it was
a third
destroyed.
world country in terms of development. It was a third world country in terms of development. Now it's by 2025 it will be a fully developed country in terms of infrastructure and technology. So there's a lot going on that I don't think that Black Americans really understand or can even fathom, that things are happening behind the scenes quicker than you can even imagine.
Mm-hmm.
Right. That's true. And I think earlier, before the stream, Lionel was bringing up, these countries, they're not going to invest, in Africa, out of benevolence, right? And definitely I agree. But there are, I guess, different variation or levels, I guess you could say, of the kind of returns that they want. Like, for example, Europe, they want to, just nakedly exploit, the continent for just mineral and resources. But, China at the same time, it's not like they don't have an agenda, but their agenda is not necessarily imperialism per se. It's more, we're building, we're laying down, an infrastructure, a foundation, so that those countries can build on it. And then later on, we're going to sell our products. So that's their end goal per se. And making sure that they secure enough oil and resources so that their country doesn't become broke. Starve.
Mm-hmm.
So those are the different lenses. But go ahead.
No, I think China gets an unfair rap for their business in Africa. If you go back to the 1960s, it was even before the 1960s. It was
earlier 50s.
Chinese. right. It was Chinese political help and military help on the ground that helped liberate a lot of these countries from their European colonialists. So China has had this rich relationship with Africa, prior to prior to them, I guess making these big investments. They was on the ground helping out Black Africans, get away from their European colonial masters. And a lot of people now are saying, "Oh, I can't believe the Chinese are colonizing Africa." So, what else do you suggest? Do you suggest that the Europeans go back and recolonize it? Like, there's always this suggestion that there's something bad about what the Chinese are doing, and there's something good, inherently good that pale skinned, blue eyed people do. And they make it seem as if you don't know what you're getting yourself into. Well, we know what we're getting ourselves out of, right? So
Right.
we know we're getting ourselves out of, and we have no interest in going back to that. And I think, again, I tie this right back into Black Americans. I think we need to take the same sort of stance that we're just not interested in being a labor force for pale skinned, blue eyed people. I think we have to start inventing things. We need to be more innovative and start exporting our innovations and our inventions. And hip hop was our first invention, culturally speaking, that was exported around the world, that was used to actually bring down governments. We saw that with the Soviet Union, that the
Right.
exportation of hip hop was actually used for destabilizing governments. So
No, absolutely agree. The only, I guess, caveat I would make is the China from 1950s was much more, I guess, pro. Uh, how do you say? I guess the the freedom of oppressed groups, because of the communist influences. But not to say that they don't have an agenda. It's just not the same agenda as Europe, because they saw the failure of at least the kind of colonization that the Europeans did, and they were no part of that. They have a large standing army, but mostly that's for security reasons inside their country, not necessarily because they're preparing. Well, they are preparing for war, but it's not the same as, like, for example, here in the United States. So I definitely agree.
just talking about Africa for before we close this out, India actually has their own Belt and Road Initiative outside of the sphere of influence of China, that they're trying to pipe between that they plan on piping through Africa. So we know that for those who don't know, India was a former British colony, just like many of these other African countries like Kenya and South Africa and whatnot were former British colonies. There's a lot of ethnic relations between Africa and India that goes back, a couple hundred years, and you see a lot of investment going back into Africa through India, through the pharmaceutical industry, as well as the oil export industry, where they take oil from Africa from the export perspective, and they actually refine it back in India, and then resell it back into Africa or in other places. I guess they have a strategic refinery that works in their favor. But that's what's going on behind the scenes. India is making investments, 50 to 100 billion dollars. Turkey's making investments. China obviously makes investments. Russia just the last couple of weeks has made major investments, and they've been on the radar. We saw the European Union with Angela Merkel and Theresa May, the Prime Minister of the United Kingdom, taking strolls through Africa, dropping off bags of money. So a lot of things are going on that we should be privy on, but we're just not on the ground to actually take advantage of.
Mm-hmm.
I know we can move on to the next article.
All right, let's get to our next article on the docket tonight. Our next article on the docket tonight comes from Cointelegraph.com, written by Marie Hewlett on October 10th. Title: MasterCard awarded patent for a partition multi-currency blockchain. Article: MasterCard has been awarded a patent for a method to partition a blockchain, making it capable of storing multiple transaction types and formats. The patent filing was published by the U.S. Patent and Trade Office, or USPTO, on October 9th. The document explains that in current blockchain systems, the transaction records stored in the different blocks that comprise a blockchain are often required to be of the same format and includes the same types and sometimes even sizes of data. This means that any entity that wants to use multiple types of blockchains, whether ones that support different cryptocurrencies or ones with varying degrees of permission or open access, is forced to operate many different blockchains at once. MasterCard notes that this consumes significant resources and computing processing power, which is the impetus for finding an alternative solution. The patent proposes that using a partitioned blockchain could resolve this problem, outlining the particulars of how block generation and transaction data storage would work in the prospective system. It coins, it coins the term subnet for the proposed partitions, which would be internally consistent but would interact in a wider single system. The patent continues to outline that a partitioned blockchain may include transaction records for three different subnets, where the transaction records associated with each respective subnet may be formatted differently and may involve the transfer of a different cryptographic currency as associated with each subnet. As previously reported, Mastercard has filed a high number of blockchain related patents. This summer, the company proposed a new method for linking assets between blockchain based and fiat currency accounts based on using a public permissionless blockchain. In the spring, it filed a patent for a system to speed up the activation of new nodes in a blockchain, as well as for blockchain systems to combat identity theft. MasterCard awarded patent for partition multi-currency blockchain. um, yeah, the stop this. The article did earlier this year. We did go over articles where MasterCard was putting in a lot of patents. One was where you can spend your cryptos from your credit card. Just have to select what you want to spend. This seems like this article seems like they're getting more and more and deeper into blockchain, and they're staying ahead of the curve. I salute them for that. Um, Particularly in the article, excuse me, in the article, what it seemed like they were trying to do is connect different blockchains together under one roof. Where this is a tough one for me to crack. You got any comments on this one?
Um, it says multi currency network though, right?
Yes.
So what I'm thinking from a multi currency network is more about the different I mean, how many cryptocurrencies are available on the market right now? It's got to be something like 500 to 1,000, right?
Hmm.
So if you have all these people holding all these varying currencies, then you need a way to make them interact with each other and be interchangeable with each other. So what it sounds like to me is that you can have multiple cryptos on one blockchain on one road, but it also seems to me that they're trying to create a standardization for blockchain that allows for multiple different currencies on one network, and that's a very strategic role to play, because if your competition only has one way of doing things, you have a multiplex way of doing things, and you have master nodes set up, you pretty much lock the market to yourself.
Yeah, yeah, that's a good that now you break it down. That's a great way for them to go through, because just by looking at the market, you have these different uh, currencies with different blockchains. They don't communicate with each other. They're not compatible with each other. You can't send one coin to another blockchain or else it get lost. That's not compatible. So yes, I salute them again by looking at this landscape and saying, okay, all these coins or 4,000, 5,000 coins are not they can't be they can't go cross platform. So what we can do is create a solution where you can cross platform these coins, Ethereum, Bitcoin Cash, Bitcoin, Stellars, things like that. So it seems like the route they're taking is an interesting route, and it could be greatly beneficial on their part. Any other comments on this one? How you doing today, Jack? How you doing?
Doing good. How you guys doing?
All right.
Hanging in
I
there.
kind of got on the cut. All right, what's up, man? I just got to the end of it, but so what does this mean for far as you know, blocks? I gotta get a terms of what. Just give me a quick summary of what's going on again with that. I didn't get a chance to read that article, but what do you think this really means for that patent with blockchain and Mastercard, right? What does it really mean?
Well, what they're trying to do is create a situation where different platforms, Bitcoin, Ethereum, Stellar, Monero, different cryptocurrencies can, excuse me, different cryptocurrencies can be used on the same platform, it seems like. And I'm trying to find, yeah, different currencies can be used on the same platform. It also notes that uh, these proof of work coins, they do use a lot of power, but they're trying to find an alternative where they don't use as much power to create the blockchain and still use it on this cross-platform. I don't want to say platform, but cross-platform platform, Mastercard platform that they're developing.
Do you think that's something like other other credit card companies gonna do that, like Visa, or is that gonna be like they're just trying to lead that, or it's gonna be like a new trend? Is that gonna be a new thing they're gonna do too?
My thinking is other credit card companies are going to find a way to stay relevant, because right now credit card companies can transact between 7,000 and 50,000 transactions per second. Currently, cryptocurrency do less transactions than that, but as it scale up, they'll soon do more transactions per second. And what I'm trying to get at is if these cryptocurrencies can work outside of the dominant fiat currencies, and you can still send money cross borders within a matter of seconds or minutes, MasterCard, Visa, and uh, these other credit card companies will not hold as much power as they do now. So now with this blockchain technology, they're seeing it and they're trying to stay ahead of the curve and make themselves more relevant in the future, keep their power. So they're using the technology and the cryptocurrencies to fold it into their system to stay relevant in the future. At least MasterCard is. I don't hear too much about Visa or Amex or Discover. Well, Discover some.
Discover is a very dinosaur-like network for for doing business. They actually are a spinoff from Sears Holdings. Sears, the company that just filed for bankruptcy. So I don't foresee them being a part of that whole entire triage of a trio of you know big networks. Mastercard and Visa are the two biggest networks. They hold at least 5 billion, 4 billion users combined. So.
Mm.
You know what's interesting, right? I'm talking to one of the guys I've been mentoring, and he, again, like he's in the technology field and again his degree, and he was telling me that regarding blockchain, I told him about it, and he went and talked to his professor about it. His professor didn't even know too much about it. So I think it's kind of interesting how like this is the early stages, and this is something that all these companies are going to, but people still kind of like don't know too much about blockchain. So But it seems like how are they going to go ahead and get this more on a bigger scale as far as getting more people to know about it? Because a lot of people already don't know about blockchain right now. Only a small number.
Right now still is in its infancy phases. People are equating blockchain and cryptocurrencies since they're quote unquote synonymous with each other. People knowing about it to the early '90s of the internet, Netscape and AOL. As this technology, specifically blockchain, as this technology comes on board with companies such as IBM, we see MasterCard and other companies start to utilize its functionality, then there's going to be a need for people they can hire to come in and build out this section of this blockchain section in our country. So right now, I've been taking classes on edX. You see blockchain classes start to pop up here and there, and so now you're going to have a lot more schools in the country that are going to offer blockchain classes and degrees. But it takes a little time, but when it comes, it comes.
Blockchain is married to cryptos because it's a method of transfer, right? It's the infrastructure that it needs to ride up on. You couldn't have, these Model T Fords riding on what do you call that? Cobblestone, right? So you needed to have some form of real paved road and asphalt and tarmac in place for cars to actually ride upon. So blockchain provides that infrastructure in its design. But I just want to get to a quick question before our person in the chat, Will33, asks a question. Let me see. Where did he ask this question at?
Oh, hello, fellas. Yeah, I think his question was about FAIR, if we know about it, and he said apparently I was trying to go to the site. He said apparently that there's no credit check. What FAIR is, I only looked at for a couple of seconds when he brought it up. I've never heard of it, so I went to the website and I posted the link in the chat. Apparently, it's an app that allows you to search cars and buy a car all from your app. And Will33 said that there's no credit check. So I don't know anything about it beyond what I just saw on their webpage. It's in the link. Is anyone on the panel familiar with it?
No, I'm not.
It sounds like I've heard of it, but I don't know the details of it. But what it sounds like to me, the whole entire aspect behind it is that the ability to buy private vehicles, private to private, without actually going through all the litigation of financing and credit and things like that. How well this works, I have no idea because I haven't seen it in action.
So you said you think that it's a person-to-person thing, more or less? It'll facilitate person-to-person car sales?
It sounds like Craigslist. It sounds like Craigslist with a with a fade or something.
Well, I'll tell you what, Will, we're gonna look into it some more. And in fact, if you know about it and you've got time, you want to, come on and give us what you know about it. You want to hop on? Look in the chat. Let's see. I guess not. But yeah. So we gotta look into it some more. It sounds interesting. I'm wondering. Like no credit check. Okay, gotta check into that. I'm just trying to understand the benefit of it. I guess it could, for person to person, I can see how it could speed things up. It's really when it would be like just adding like a Square Cash or electronic payment to car sales. I guess you would have some of the motor vehicles like registration and other type of information. I'm just trying just imagining what how an app could expedite without knowing anything about FAIR. I'm just thinking out loud how an app could expedite a car sale transaction.
Yeah, it sounds like CarMax, and on a person-to-person basis, whereas CarMax is the actual store. you would actually have people being their own CarMaxes.
Oh, so I'm sorry. So the Will 33, you're saying the stock name is it's Alley? I thought Alley was something else. It's Alley. Are you telling us in the chat, Will 33, that Alley is the name of the company that owns Fair? Is that what you're trying to say? Give me a yes or a no in the chat if that's what you're trying to tell us.
Say yes.
Promo says that it's a leasing business model and not an actual product, right? It doesn't belong to anybody in particular. But you know what Will 33 is saying is that the stock's name is Alley, but Alley was is one of those online financial lenders. So
yeah, we're gonna have to look into it.
We'll come back to it. Yeah, we'll come back to it next Friday.
Right. Thanks for tipping us off. This looks like something we need to. This will be big if it's gonna it would speed things up, and we got to know about it. Thanks.
All right. Let's excuse me. Get to our next article. This one comes from ccn.com. Titled Dubai to launch blockchain payments with state digital currency Mcash. Excuse me. Written October 8th. Article. Dubai residents will soon have the means to make payments for school fees, bills, and other retail purchases with Mcash, a state-developed blockchain-based digital currency. The UAE's first official credit bureau, mCredit, under the Dubai Department of Economic Development, is pushing its official blockchain encrypted state digital currency, Mcash, rolling out point-of-sale devices at government storefronts across Dubai. Point-of-sale devices will also be deployed at retail storefronts, enabling both citizens and residents of Dubai to make purchases following a partnership with blockchain payments provider Pundi X, Trade Arabia reported on Monday. A spokesperson for the state-backed subsidiary, mCredit, stated, quote, to be the world's first city to offer blockchain-based payment solutions to our residents is an exciting moment for Dubai. Deploying cutting-edge technology such as blockchain is a key priority and is delivering benefits to our citizens in the form of convenience and securities to customers and merchants across Dubai, end quote. As reported by CCN in October 2017, Mcash was developed as Dubai's first blockchain-based digital currency as a digital equivalent to the dirham, the UAE's fiat currency. While UAE residents use the digital currency via a smartphone app, MPay, the blockchain enabling the digital currency is compatible with shared ledgers to record transactions instantaneously, while control over payments is not limited to a single member in the MPay ecosystem. mCredit Chief Executive Muni Al-Qasab explained at the time. The entire ecosystem consisting of the digital currency, the smartphone application, and the point of sale terminals will see development and testing before their approval by government regulators this financial year. The development comes at a time when the Smart Dubai Office, a government initiative led by the Crown Prince of Dubai, has approved a citywide blockchain payments platform connecting all 38 government entities, partnering financial institutions and other municipal departments in the UAE's largest and most populous city. In this particular use case, the blockchain deployed is compatible with both public and permission blockchains using open source Hyperledger and public Ethereum tech. Dubai to launch blockchain payments. Also getting ahead of the blockchain curve. Other countries in the world, such as Venezuela with the Petro, but other countries other than Venezuela have talked about starting their own state currency, such as Israel, I think Russia, we talked about, and a few more other countries that we talked about. Putting their own currency on the blockchain and and using it as such, to me, streamlines payments and cuts down on a lot of dinosaur activities in terms of using cash and waiting or writing checks. You pay for something, you instantly, such as, let's say, you paying for taxes, or in Dubai, you pay for it with this M Cash, and it's instantly known that, okay, you pay your taxes. There's no wait. Other than that, any other points?
No, I think you summarized it great. I would actually, I would say that that's a business model for any African country to actually model themselves after. I see this actually working in in the third world, right? Places like Cuba, places like Dominican Republic and Haiti. Actually, an
Mhm.
excellent business model. I mean, but when you can afford to invest into it, that's what that you get the results that you that are most desirable.
And yeah, I tip my hat to you, the UAE, by staying ahead of the curve. We hear other small countries being quote unquote blockchain countries, such as Malta, I think Estonia, and these other smaller countries that know they're not resource heavy, so they have to be technological powerhouses. And with this new technology and technologies coming into fruition in the next decade, they're getting ahead of the curve and making themselves more powerful nations by being blockchain powerhouses, autonomous vehicle powerhouses, and whatever other technology that's coming out, powerhouses. And for they have right now, they have the power to do it because they are resource dependent, and their resource dependency is waning. So they're finding a way to sustain their country in the future, which is this technology. And I tip my hat off to them, and they're finding a way. And if this works, it's going to change other countries and other leaders' minds about a blockchain and cryptocurrency. And with your previous question, Jack, when you said, what about the classes of blockchains? This goes into effect and is successful, and it changes these leaders' minds, then other countries are going to want to do it, and they're going to start to teach their citizens about blockchain and offer classes in it.
I got a question for you guys. Do you think like every week it's like a new country is coming up with their own? It's in my imagination, but it seems like every country is a new country is coming up with their own cryptocurrency.
It's not your imagination; it's the truth. I read articles where more stable coins are coming into into the cryptocurrency space. The one stable coin we spoke about a few weeks ago, the USD coin. There's other exchanges uh, introducing their stable coins. You got True USD. Obviously everybody know about Tether, the coin we talked about. I think, and it's like at least 5 other stable coins that are out there that are tied to the US dollar or the British pound sterling or any other fiat currency. It's not your imagination. It seems like it seems like, well, am I crazy? No, you're not crazy. I see it too.
Well, do you think that the United States is going to develop its own, adopt its own cryptocurrency, formally adopt one or create one?
I thought they were talking about FedCoin.
I would not invest.
Wow, this is getting crazy. The thing that comes to mind also, just everybody listen, just know that the Forex stands for foreign exchange, and this is the currency market. It's considered relative to the stock market, the foreign exchange market. It's considered the dog. Say like the stock market is considered the tail, and so historically, the foreign exchange was always dwarfed the stock market in terms of size, the amount of money being exchanged over it. Now with cryptocurrency, it's going to really become explosive, and a lot of Americans going to have to really learn how to trade forex, because all of this is just more and more action is moving in these in the currency market, and cryptocurrency is just that, a currency. Go for it.
I don't want to cut you all off because you all are breaking up to. So if I cut anybody off, let me know. I have a report, our article, which says I forgot who said it. I have to look back on it, but they were saying XRP is a currency, and XRP is the third largest cryptocurrency according to by market cap. So with these, if more cryptos are labeled currencies, then me personally can see this market, along with these stable coins and along with these countries that are implementing, as more and more countries implement their own currency, I can see this crypto market being a large market as derivatives come into play, ETNs, ETFs come into play. I can see it as a large market itself.
Yeah, I agree with that.
Yeah, gonna be huge.
So, Dollar Will, you will have plenty of charts to chart.
Oh yeah. So it's gonna increase trading. With all these extra coins, there's more opportunities to make money because these coins are currencies are quoted in pairs. So it's like the dollar relative to the euro. So it'll be like, or euro UWR for euro / USD or a Bitcoin dollar. It's always quoted in pairs. Now, when you get this many additional currencies, now the prices don't always move as quickly as they should. They're like, over time, relationships develop between these pairs, and they slip out of sync like within a day. And so that's we call that arbitrage. And so that's going to create a lot of arbitrage opportunities for people to make a lot of money just because one currency, let's say it went up too high or down too low relative to the rest of the world, and it may be out of sync for a couple of hours, and there'll be a lot of people making money just trading that arbitrage, that out of alignment as it comes back into alignment. It's just going, you don't have to understand it. Just know that's going to be an attractive feature that's going to make even more money go into the currency market, the cryptocurrency and the traditional currency market. This is an exciting time.
Yeah, there was a lot of arbitrage opportunities during the last bull run because South Korea did a lot of volume in terms of Bitcoin, so they were paying a premium. But here in the rest of the world, Bitcoin was it's regular 10,000, 12,000. Even in Zimbabwe, they were paying a premium. So if you would have went to these crypto exchanges that tailored to South Korea, Zimbabwe, any other country that paid a premium on Bitcoin, that was great arbitrage opportunities in the thousands of dollars.
Well, what I'm thinking here is I think that you're going to see a more stabilization of coins, right? So if you're a nation state and you create your own coin, or you're creating a nation state coin for yourself, you're going to peg that into some other natural resource, whether it's cobalt, whether it's oil or it's gas. There's a variety of things that each nation state has that they can peg it to, and you would actually have to do business with them through that cryptocurrency. Now, what this can open up is a can of worms for violence, because if you don't trade in USD, then that causes a lot of problems, and Western powers don't like when you deviate from their currency.
That's what I want to ask you. Like, do you think the biggest problem is going to be like this? This shift is going to have to happen, right? These countries are trying to back up their create currencies and then back it up with resources. So it's going to happen. But one thing that kind of like it's in my mind is, certain countries not gonna like it, like US, because again, they It's gonna make their dollar spiral, right? They're gonna lose power. That's where their power is at. So, what do you think is gonna be the other than that? What do you think is gonna be the outcome? Let's say of other countries who are dependent on other countries using their currency. What do you think they're gonna do next from this?
Well, you can't take their currency out of circulation because it's all digital.
Am I talking? Okay, go ahead.
Yeah, you can't take their currency out of circulation because it's all digital, and if it's recognized by the if it's recognized by the institutions like such as IMF and World Bank, you have no choice but to do business with them in that currency. So with that being said, if a stronger power decides that we don't want to do business with you in that currency, you could end up like Saddam Hussein in 2003 when the United States decided to invade his country based on the premise that he switched his he stopped trading his oil in dollars and for euros. And you notice that the Europeans did not get involved in that war at all. It was actually the Americans and the British that got involved in that.
Understood, but what are they going to back up? Like, what can U.S. back up their? Let's say they would make it create like a Fed coin, right? What can they back up their currency with? Like, the reserve they have in America.
Yeah, military power, just like the economist said.
That's deep.
Guns. And it was a former SEC member that says XRP is a currency, not a security, because it fails the Howey test. That was what I was referring to. So, yeah.
Go to the next.
Guess. Yeah, get to our next article here. Good show so far. Our next article comes from ccn.com, written October 5th. Yale University has invested in 2 cryptocurrency funds. Excuse me, per report. The herd of institutional investors that cryptocurrency bulls, such as Mike Novogratz, have perennially said is just over the horizon, is finally making an appearance, as reports have emerged that one of the world's largest university endowments has invested in 2 cryptocurrency funds. Yale University Endowment makes cryptocurrency play. Citing an anonymous source familiar with the matter, Bloomberg reports that Yale University, the Ivy League school whose endowment is the second largest in higher education, has invested in Paradigm, a cryptocurrency fund founded by Coinbase co-founder Fred Erstrom, former Sequoia Capital partner Matt Huang, and Pantera Capital veteran Charles Noyes. Including Yale's investment, Paradigm has raised $400 million to invest in the cryptocurrency space, making it one of the largest such investment funds alongside Pantera, Polychain Capital, and Anderson Horowitz. Currently, CNBC reports that David Swenson, Yale's Warren Buffett, invested university money in Anderson Horowitz's $300 million cryptocurrency fund, which the firm announced in June. Notably, Anderson Horowitz said at the time that it does not intend to be a fair weather investor. We have an all-weather fund. We plan to invest consistently over time, regardless of market conditions. If there is another crypto winter, we'll keep investing aggressively, the firm said at the time. Yale's endowment currently stands at $29.4 billion, a record high, following a return of 12.3% during the fiscal year that ended on June 30th. A majority of these assets, 60%, are directed at alternative investments. Over the past decade, the university has returned an average of 7.4%, beating the 5.5% average university endowment return by a sizable margin, according to the Yale Daily News. Yale's move gives institutions excuse to buy crypto. Earlier this year, John Lohr, founder of Capital Fund Law Group, suggested the academic institutions had begun to invest in cryptocurrency on a limited basis for strategic reasons, though he declined to name the endowments. It's now clear how much capital Yale contributed to Paradigm and Anderson Horowitz, and it should also be noted that the endowment has not confirmed the news publicly, but the size of the investment might not matter. Ari Paul, Chief Investment Officer at cryptocurrency hedge fund Block Tower Capital and a former portfolio manager at the University of Chicago's endowment, said in April that he thought it was inevitable that endowments would dip their toes into this crypto asset space, a move that he said would convince other institutions to make similar bets. We're in a bear market until new buyers are enticed, he said. Even a small dollar amount is legitimizing. If that happens, every family office says, oh, yells in, that gives us an excuse. Paul's forecast is beginning to come true, at least per the reports. The next major step will be rather than entrust capital to digital investment funds. University endowments and pensions themselves began investing directly into the cryptocurrency market. A key hurdle toward realizing this has been the shortage of regulated cryptocurrency custodians, particularly among the respected Wall Street banks with whom endowments are comfortable working. However, as CCN reported, three of the largest investment banks in the U.S., Goldman Sachs, Citigroup, and Morgan Stanley, are said to have been building out custody products for crypto assets. Meanwhile, BACT, the cryptocurrency wing of the International Exchange, or ICE, the parent company of the New York Stock Exchange, or NYSE, will begin offering physical warehousing for Bitcoin in November, allowing institutions to easily trade BTC in a regulated environment overseen by one of the world's largest exchange operators. Billionaire macro trader Mike Novogratz, a longtime Bitcoin bull who has nevertheless pared back his short-term price forecast in recent weeks, gave a speech in late 2017 titled "The Herd is Coming," in which he argued that institutional investors are not far off from making a significant crypto play. Throughout the current bear market, he has maintained that although the cryptocurrency market has heretofore been driven by retail enthusiasm, the next rally will be fueled by institutions. As CCN reported yesterday, Wall Street strategy firm Fundstrat recently conducted a recent poll of cryptocurrency investors, which found that, perhaps contrary to popular perception, institutional investors are more bullish on Bitcoin than their retail counterparts. According to the survey, a majority of institutions expect the flagship cryptocurrency to end 2019 above $15,000, an increase of about 130% from its present level below $6,600. And wow, Yale University has invested into two cryptocurrency funds. Report. Yale University has the second largest endowment. The largest endowment in the country is Harvard University, but still, them investing into cryptocurrency at a low market like this is something major because I think it said they're invested in Paradigm and 60% of their endowment is invested into alternative investments. When institutions like this, go ahead.
No, go right ahead. I'll go right after you.
When institutions like this invest into cryptocurrency, they're not investing into the quote unquote shit coins. They're investing into the top 5, 10, and even 25 currency according to market cap. They have done their homework. They know what they're doing at this point when you finally see them invest into the cryptocurrency space. And that's my point.
Yeah, I think it's also unfair too. When you start thinking about cryptos, you always think about the poor man trying to take his pennies and his lunch money and invest into it, and then you have some big whale, a super whale at that, like Yale and Harvard and MIT, jump into the market, and you're like, you just made a big splash, and not only did I get wet, but I'm out of the pool now.
Right. The article, I wanted to point out also that when the article talks about retail versus institutional. Retail, I I guess it's better to say it this way. Institution is just that big institutions, big money management firms. You know, in this case, we're talking about a university, and they have big endowments, and those endowments is like stashes of money that they invest to try to help them get through hard times. Ideal or optimally, they would like their endowment to grow to be big enough to be able to fund the operations of their business. A lot of nonprofit organizations try to get establish endowments, just so that they aren't dependent on people giving money. So when a institution, a college or a hospital or some nonprofit, when they invest in something like a cryptocurrency, they get high quality information, high quality advisors to help them make those types of decisions. So that's saying a lot to the rest of the market that they're giving the major cryptocurrencies the green light. In past shows, we talked about over time the market cap was going to increase for cryptocurrencies, and we discussed when the big money, the whales, come in, that's going to increase the market cap. That's going to also fuel higher prices. And Harvard and Yale, those are whales. Those are whales. And then, as the article described, the rise to, let's say, 20,000 for Bitcoin, that was mostly fueled by retail traders. Retail is everybody except the whales. That's you and me and everybody listening, and of course some rich folks, some rich individuals, but not big institutions. Okay, what was that? What was the size of that endowment? 29 billion. Is that was that it? Yeah, that's a huge number. So and they said that they investing like 60%, not all in crypto, but in sort of like aggressive things. I thought that number was kind of high for like aggressive types of investments, because endowments usually are kind of conservative, but that for them to have such a large slice of their money going into more aggressive things, that also is a vote of confidence, that they feel that this is a good thing to do. And so that's going to change the sentiment, the opinion in the country about the relative safety of investing in cryptocurrency. So the whales are definitely here. And if cryptocurrency, if Bitcoin made it to 20,000 with just a lot of us mom and pop traders and a couple of millionaires, or billionaires, that's nothing compared to the momentum and energy that's going to be behind these cryptocurrencies now that the whales are here with the institutional investors.
And I want to put on my conspiracy hat, and these people are investing into crypto while the market is down, and the traditional stock market is stuttering at the moment. Is that some type of coincidence?
They did not. You see, you gotta, when those kind of articles come out, you have to kind of read between the lines. They said, I believe in the article, they gave they defined a period of time and a certain amount of money they were going to be investing. Because the article came out now, it doesn't mean that they are pouring their money into it now. They know how to read stock charts, and they're doing technical analysis as well. I'm sure that they're going to ramp up the dollar amount that they put in over time. They know that the dollar strength is not a healthy environment at this moment, for a lot of these cryptos. They know that. And so, I'm sure that maybe they're trading in and out right now, but when it hits the bottom, when the dollar gets to its top, these cryptocurrencies are going to move fast because there's too much big money paying attention to it now. And they're going to know, they're not going to wait for the exact bottom. When it gets close enough in the general area, they're going to start pouring money in it. You might see like right now, the reason when you see like on Bitcoin, a stock goes sideways for a long time, that's money coming in, stopping that thing from falling. Bitcoin should have fallen already. It's going. I believe it will fall. I don't think this is the time for it. But when you see something go sideways, as long as Bitcoin has been in this $6,000 area, $6,000 to $7,000 window, it's been going sideways for most of the year. You know, but at some point that floor is going to break, and we're gonna hit that bottom. But when we get there, when you got a university with $29 billion saying that they have 60% of that money that they're prepared to invest in risky things like cryptocurrency, or aggressive investments like cryptocurrencies, when it gets to the bottom, it's not going to stay there long. Because too many people are watching with a whole lot more money than you and I, and they are a whole lot better at reading charts than Dollar Will. Okay, so but if you keep watching this show, we will let you know when we think it's near that bottom point, and we'll show you on the volume graph as more money starts to come in. It's nothing we won't have to guess at it. We will be able to see on the graph that more money is coming in, that it's rising week over week, month over month. We won't know whose dollars those are, but we'll know that the big money is coming in.
Any other comments?
So let's say they put the investment in, they're successful, right? What is gonna, when these institutions have all this extra money, what are you then gonna do with that money? It's gonna just be invested, or you're gonna put it into certain projects or certain research development? What do you think?
Well, they're gonna grow their endowment. That's what universities, that's what they do. They grow their endowment. In fact, they sometimes they'll turn around and offer more scholarships. It gets to be a political football when you have the students learn how big the endowment is, and the students will buck against tuition increases because when you have a big pot of money there, it's just like Congress. If Congress has a lot of money, people are, they don't have any shortage of ideas of what you should do with that money. And so that same kind of thing happens in nonprofit organizations that have big endowments. People have all kinds of ideas about what that money should be used for.
They also use it for infrastructure development, building more dormitories and things like that, more shuttles, shuttle lines and things like that.
Does the endowment money, Mike, ever get used for like research, like in the scientific research and stuff like that? I don't know. Okay.
Yes. PhD programs are especially. That's why you typically don't see like community colleges and state colleges really having endowments like that.
Yeah, well, it helps to have billionaire, graduates to turn around and leave their, will their estate, a percentage of their estate to the university, because that happens a lot at Harvard and Yale.
Right, but I think we talked about this before.
Any other comments on this one? Oh, my bad.
I know. Can you hear us?
Yeah, you all coming in, you breaking up on me. Maybe I think it's my connection.
Yeah, I don't know if you're having a storm down there or not, but I was just replying to Dollar Will, so I just want to reply to Dollar Will real quick. What I was saying last week about colleges and universities, how to fight student loan debt, you could actually use cryptocurrency in the blockchain to actually get around a lot of that, get around a lot of the student debt issue. You having big endowments, like 29 billion and 56 billion at Harvard. I mean, it doesn't make any sense that a person should be in student loan debt with all that endowment in place. I think that if you can utilize that endowment to actually create cryptocurrencies by your university becoming one big masternode or even multi-masternodes, you can actually get a lot of things done just by the dividends alone. That's all I have to say.
Oh yeah, I'm sure some body of students is going to be paying attention to the growth of that endowment. So later, if it gets to grow and double, if their investment pays off, you know, a couple of years from now, you hear about some Ivy League students protesting to have their tuition debt waived. You can think back to the Black Brain Trust.
Absolutely. We can move on to the next article.
All right. I'm going to read this. I'm going to give my computer a restart to make sure maybe that'll knock out the bugs. All right. This one comes from Cointelegraph.com, written by Marie Hewlett on October 11th. Title: Report: Harvard, Stanford, MIT endowments all invest in crypto funds. Wow. Here comes the money, people. Article: Multiple Ivy League and other prestigious U.S. universities are said to have made investments into at least one cryptocurrency fund. The report was published by the technology news site Information Wednesday on October 10th. Citing an unnamed source, the information reported that the multi-billion endowments of Harvard University, Stanford University, Dartmouth College, Massachusetts Institute of Technology, or MIT, and the University of North Carolina had all invested capital in the crypto space. This is a sign of the asset class growing acceptance among institutional investors, the source said. Harvard's endowments is reported to have made 39.2 billion during the fiscal year 2018, making it by far the largest university endowment across the globe. In the wealthiest U.S. college rankings for the previous fiscal year, both Stanford and MIT's endowments scored within the top 10, fourth and sixth respectively, with Dartmouth College and the University of North Carolina also appearing in the top 25. As reported last week, fellow Ivy League titan Yale has also just been revealed to be a crypto investor. The college is said to have been one of those that helped to raise 400 million for a new crypto-focused fund created by Coinbase co-founder Fred Erstrom, former Sequoia Capital partner Matt Huang, and Charles Noyes, formerly of stalwart crypto fund Pantera Capital. With news that the world's leading academic players are backing the emerging asset class, a host of top international universities have also been contributing to acquisition in skill acquisition in the space by offering blockchain, smart contract, and cryptocurrency related courses. Institutions such as Cambridge University have conducted substantial research into the crypto finance field, and Swiss University Lucerne even accepts Bitcoin payments for tuition fees. Wow. Um, Report: Harvard, Stanford, MIT endowments all invest in crypto funds. Before you all say that, I want to just point out a sentence. It said, with the world's leading academic players are with news that the world's leading academic players are backing the emerging asset class, a host of top international universities have also been contributing to skill acquisition in the space by offering blockchain, smart contract, and cryptocurrency related courses. That's yeah. All right.
Do you think that's
I'm gonna
EDX?
restart my computer.
Well, I don't think it's EDX. EDX is free, right? So they're actually dumping all their courses from the last 2 or 3 years ago. But now EDX is starting to have full master's degree programs. I think 20 of them are up there right now, just in the last few weeks. So, and they're very, very cheap. So they're 1/3 the price of what a traditional brick and mortar tuition would cost. So some new stuff coming down
Okay,
the pipe. I've already
give us the short. What is EDX, Mike? For people who just turning in, never heard of edx.org. Explain it briefly.
EDX is a hub of academic programs by accredited institutions that are on there for free, or you can pay a small price for the certificate that comes with it. Usually a certificate costs anywhere between $10 to $900. So if you enroll in any of those courses that are actually accredited, you can actually transfer those credits to another institution that's accredited as well, and they accept those credits. But most of the programs are directly connected to the institution that they came from. So your Georgetown universities, your Harvard universities, MIT, all of those institutions have put their courses on to EDX for everybody to have access to, as long as you're within the legitimate nation states that are allotted to have access to it. North Korea, Iran, and Syria need not apply.
Good stuff. So we had, let's see, while Lionel was rebooting his computer, Lionel was taking a BlockChain course on EDX and anti-gravity. What was that course he was taking?
I think it was artificial intelligence.
Artificial intelligence. Wasn't somebody else taking? Was it Lionel? Someone took an automation course, didn't they?
I forget who it was. I wanted to say it was anti-gravity.
Okay.
But the article, I just wanted to point out one of the points from the article. They referenced, paying for classes with or courses with cryptocurrencies. We just talked about that about 30, 45 seconds ago with the last article about Yale investing into these crypto these crypto funds. So what I'm starting to see now is they're starting to get the point that there's an alternative to do business from an academic standpoint, and I can see this going even further. If you need financial assistance, that may come through something like Bitcoin or even some higher.
You still there, Mike? Try it again.
Yes.
No, we don't hear you. We're losing you.
So,
go ahead.
So, okay, seeing these institutions are investing heavily into these currencies, right? So, do you think if they're taking a risk to invest in currencies, do you think them these in the university will invest in like even in African countries and start doing invest in their education? Because it's like if other international schools are doing it, right? Do you think that they are going to do? Because it seems like they're just not afraid to just put their money in different places, right? And so do you think they're going to invest in other countries like that? Like if they're willing to go for cryptocurrency, they're not going to go for like resources?
Well, I mean, these endowments invest in resources in other countries and other companies just as a matter of course. So I'm sure they already invest around the world. They have a diversified portfolio, and a certain section of that I'm want to say I guarantee you is they have a international presence in their investment. So I'm sure they're already investing in Africa and all around the world. Yeah. So Mike, can you hear us?
Yeah, I can hear you.
Okay, good. Now we hear you too. Okay, yeah, because you went out on us the last time. The board went out.
Mm-hmm.
So yeah, so I guess we're waiting on Lionel to come back. Rebooting his computer, he had to string the cans together.
Yeah, that happens. I just find all this to be very interesting in terms of where we are in the market now. I mean, everybody's investing into crypto, from your your bean pie sellers down to your up to your super whales. So
right, it's just good to not be behind. Just to be ahead of it before change, to have a chance, an opportunity to participate. That's great. That's exciting.
So what do you think could be the biggest problem from this? All these big whales coming into the market. What do you think could be the biggest problem with this?
I
They
don't
could
see a
actually.
problem. I don't see a problem. I see the problem is that people just don't pay attention and they don't get a chance to participate. But I don't see a problem.
Please don't get me started on this. Go ahead.
No, I guess my point was, I didn't mean to cut off Dollar Will, but I think what you're going to see now is more stabilization, more investment. Because before, I think Bitcoin only had like 12 to 13 wallets that hold 80% of the crypto of the Bitcoin availability.
Mm-hmm.
But I think that you're going to start to see it divvy up more and more over the next 2 or 3 years.
So when you say stabilization, what do you mean? Do you let me just ask that. I'm not going to ask a compound question. Mike, when you say stabilization, explain that again. What do you mean by that?
You'll see less volatility in crypto. Right now, everything is kind of centralized around Bitcoin, right? So in order for you to go from one coin to the next and to a USD, you have to go through like Bitcoin. But as alternative methods prop up, like Coinbase and some of these other wallets that start to prop up, you won't have to go through a Bitcoin anymore. And all the whales that are starting to hold Bitcoin now will stabilize. I think they will stabilize the volatility of Bitcoin, and then on the other hand, your small fish are going to start to be able to creep in on different coins and not have to be subjugated to the Bitcoin exchange. If that makes sense.
I got you, but this is what makes the market. Got people coming in with their money, looking at the same information, but coming away with slightly different opinion. I understand what you're saying about Bitcoin. Let me see if I got you. So everybody, the way the system is right now, everyone that wants to buy a cryptocurrency, they must first buy a Bitcoin and then trade that Bitcoin for the other cryptocurrency that they want. And because of the way it's structured, that everyone has to buy initially or even subsequently trade to and from Bitcoin to go wherever they want to go, whether that's to cash or to another cryptocurrency. You're saying that that very structure is what caused Bitcoin to shoot up to $20,000. Is that what you're saying?
Correct. Somewhat
okay.
Correct.
Okay, what am I missing?
You don't necessarily have to. Go ahead, Lionel.
Well, it contributes to it going to the steady volatility, because if you're trading, swing trading, you have to go in and out of Bitcoin, and you just want to come out of something. If another coin is falling, just want to come out and sell back in. So it just contributes to the volatility of Bitcoin. But as Mike was saying, as new money come in, more money starting pouring in, and different pairings. And when I say pairings, if you want to buy Litecoin, you must have Bitcoin, Litecoin, Bitcoin pairings. That BTC dominance or Bitcoin dominance in purchasing other coins is going to become less. So you'll be able to buy an Ethereum with whatever fiat currency or other than something else. So thereby Bitcoin is going to get some type of level of stabilization, because people are not going to be trading in and out of Bitcoin multiple times a second.
Okay, was that your point, Mike?
It was.
Okay, so I got it now. So people are going to be able to go directly to the cryptocurrency they want and not necessarily have to go through this pit stop of buying a Bitcoin first. So, okay, so that will reduce the volatility of Bitcoin. So Bitcoin may not rise as high because it won't have this, I'm going to call it artificial transactions. Okay, people buying Bitcoin not because they really want to own Bitcoin, but because they really intend to trade it to buy something else. exchange Bitcoin for. So with that artificial trading activity removed, that should negatively affect the rise in Bitcoin. That's the theory. That's the theory. But I think that because of the institutional investors and the growth of the retail investors, people like me who never participated in that rise to 20,000. I guess I'm not saying Bitcoin is necessarily going to be the lead dog and lead the pack and be more prosperous, appreciate more than any other cryptocurrency. I'm saying something will, though. Something will. The market will crown a winner. As you discussed earlier, that a lot of these countries are going to peg their cryptocurrency to a natural resource or a basket of natural resources like oil, natural gas, gold, diamonds. There will always be one country that will be presumed to be stronger. And so that's what markets do. Markets crown a winner, crown a king. And so that money will find its way to a king. And so if not, maybe it was Bitcoin last time, maybe it'll be something else. Or maybe it will still be Bitcoin just because that's the name brand that people know.
Well, Bitcoin is popular because one, it's the oldest, and two, it's the most invested into, right? So all these other coins are the new kids on the block, and when you have some a currency like Bitcoin just being so heavily invested in, so popularized, it does become a sort of reserve cryptocurrency on the global market, and that makes it difficult for others to get in. So now, I think over the next few months, and maybe even by 2019, first quarter, second quarter 2019, you're going to start to see a shift because other alternative methods for marketplace exchanges is going to take place, and now you're going to start to see all those sub coins that are below Bitcoin right now. Your EOS, your Ethereums, your XRP. I think we just talked about XRP being the third highest. You're going to start to see a lot of those start to shoot up, especially with the adoption rate. It's not just private institutions adopting it. Now you're starting to see countries like Taiwan adopt Ripple, Dubai establishing their own framework and probably piggybacking off of another blockchain and cryptocurrency. So you're gonna start to see people start to shift away from Bitcoin because it's too costly, not really necessary for what they need to do when they can just adopt another coin that's actually more efficient for pennies on the dollar, and that's where your penny coins start to come into place. People like Maddie Ghost start to invest into those.
And I've recently heard of reports. I haven't read them yet, but people I listen to, they've been saying that Swift is trying to are in talks with XRP because they don't want to get left behind. Swift is a dinosaur compared to XRP. So the adoption rate is starting to skyrocket, and that's why I'm so bullish on cryptos and other black men and black people investing in the cryptos, because currently right now they're cheap. The market is 200 billion.
Okay, fellas, I gotta throw a flag. I gotta blow the whistle, throw a flag. I'm gonna have to fine you a 15-yard penalty. We said adoption rate about 2 or 3 times. Explain that to me. What's adoption rate? I know it sounds basic, but bear with me. Make it plain for me.
Adoption rate would be like when the Cowboys used to be hot with Aikman. No.
Okay. All right, man. Okay.
No, adoption means new investors, new members coming on board. You can have new private institutions that jump on board, and then you have your individual fish on the ground that are going to start adopting too.
You
So
mean
both of those combined make them.
you mean people using it like money as opposed to people investing in it? Was that what you mean by adoption?
People investing into it for one, because you don't really spend those other coins anywhere anyways.
Okay.
So people are just vesting into it. But when you have private institutions start adopting it, then it becomes game. You know, it's game on basically.
So let's go back to what, let's say when we were talking earlier about Harvard, and was it Harvard that had its own coin, and we're coming out with their own coin? What university was that? Was that Harvard we were talking about, or Yale? One of them. Yeah. So that would be a case of, let's say, adoption in that context would be, could that be like another university or something saying we want to purchase some of the Yale cryptocurrency? Would that be, I'm trying to think functionally, how would that, when you say, would it be other schools, or would it just be other financial institutions, investing in it?
I think it's purely investing. I don't foresee them creating their own crypto. Just investing into the top cryptos that are out there. Again, doing their research, seeing that these cryptos have use cases in there. These are blockchains that are useful, and investing into them and expecting a return.
Okay, so you do really mean, when you say adoption rate, you really do mean attracting more investors.
Attracting more investors, yeah. That's the right now. That's the basic, yes.
Gotcha. Okay, I just wanted to understand if that was the entirety or the lion's share of what you meant, or if it was a broader concept than that. But gotcha.
Yeah, that's why I'm so bullish on Black people investing into cryptos, because early this year in mid-January, the market topped out about $830 billion. And right now the market is $200 billion, which means, quote unquote, blood and street, things are cheap. These things are discounted from their all-time highs. And the market cap is relatively cheap compared to other traditional stocks. Forex is peanuts. But with this adoption rate and institutional investors pouring money in, this thing can balloon. It can skyrocket.
Yep, that's a sign.
So when I say, invest in a top, again, this is not, oh my God, this is not financial advice. Please go to cfp.net to find yourself your local certified financial planner or a certified financial analyst. But the point I'm trying to get across is potential. These things have potential. If hedge fund operators, capital investment operators, they're saying, yeah, this thing can have a $40 trillion market cap. Bitcoin can go up to $100,000. And these are people that are heads of hedge funds, heads of capital investment firms saying this.
It's a Ponzi scheme.
Your voice, your mic needs to turn your mic up. Are you listening to? We can't hear you that well.
I was saying.
I'm sorry, I wasn't sure if he was talking in the background or he was talking to us.
No, he was talking to us. He was trying to turn.
You guys hear me now?
Yeah.
Yes.
Oh, I was making a facetious statement to Lionel. I was saying, hey, Lionel, it's a Ponzi scheme.
And the things we talk about, Black America need investment. Black America need an influx of cash. These are the ways you do it. Investing, not just in cryptos, but in the real estate, into traditional stock markets, and knowing how these markets and asset categories operate compared to one another. This is how you do it.
Well, we're gonna explain all that over time on the
You know what, Don Will? My
Black
arm
Brain
hurts
Trust.
for beat. My arm hurts for beating this drum. My arm hurts for beating this drum.
You know, we got to be patient with people because I didn't get. I told y'all my story. I got into it as an adult when I went to the job and I saw. I can just no other way to say it. This white guy that was younger than me, and he knew, from my perspective, it sounded like he knew everything, and I knew nothing. And I didn't know anybody. He knew everything about stocks, and I didn't know anything. I didn't know anybody in my family that I could ask about it. And I said, well, I'm going to have to be the first one in my family. So, if you listen and you don't have anybody in your family that knows how the stock market works, then you're going to have to step up to the plate and be the first one in your family. That's the only way we can change
Yeah,
this.
it's the only way.
You know what's interesting, right? It's like I look at the black people spend what $1 trillion consuming in consumer dollars, right? I'm like, if they could just sort of divert some of that funds into um, their own economic upliftment, right? It's like they open up doors for themselves. Because I listened to uh again, like I've been I listened to the Martin Luther King last speech he had, right? And he was discussing economic incursion. And I'm like, that's a great solution to it right there, right? Like, just diverting the consumer, what we spend on investments such as these. If an institution can do it, why can't we?
Because
Well,
we don't have an institution.
just as individuals and as citizens, there there are three ways you can make money in America. That's the way I want to say it, or three ways we relate to money. Let me put it that way. You can be an employee, which where we are mostly. Uh, you can be a business owner, which is where we need to go, where we're trying to get more people to move up from that lower rung. The lowest rung is to be the employee. Then the next level is to be the business owner, a business class, business ownership class. The next level is the investor class. And we need to be on all three levels, and throughout our life, we need to grow through all three levels. You start out young as an employee, later you own a business, then after that you become an investor, or you go right from employee to investor. And if you're really successful, your investing becomes your business. So that's possible too. But that's where we are. That labor class existing only as an employee, that's as close as you can legally get to slavery right now. That's basic slavery.
Technically speaking, Dollar Will, if you look up the definition of employee, technically that's what it means. But you're right. That's about as close as you can get.
Yeah, and if you've ever negotiated a union contract, these companies make you negotiate just about up from slavery, because they try to start the negotiations with they own you, they own your entire 24-hour day. And if you look at the history of labor law and labor laws in this country, the unions had to get the 40-hour work week for you, the 8-hour day, your Saturday and Sunday off. I mean, you really worked up from slavery to have a balanced life. And companies even now try to make you feel guilty and question you're supposed to be loyal to the company. And that loyalty is demonstrated by working more than 40 hours. See, they got us in the trick bag.
Well, Dollar, I was going to say, I mean, you had a lot of job labor laws and job protection laws that have been repealed. Largely, that was under Obama now. Like, let's the gig economy got its wings under Obama. So, that's how you delve back down into that realm of looking at your job and saying, damn, dude, this is a lot like slavery, because the removal of a lot of those job protections did reduce the quality and level of the work that you did just a couple of notches below where it was before. So you start dipping down closer and closer into that realm of slavery. I mean, you're absolutely right.
Yeah. I'm going to pump my brakes right now, because I'll go on and on about my passion for union and all of that stuff. But let's get back to the money.
All right. Next topic on the docket tonight comes from ccn.com. This is in their blockchain news, dated October 5th. Title: 14 Italian banks complete interbank transactions on R3 blockchain quarter. Article: a consortium of Italian banks has successfully completed the initial trial of a blockchain-based system aimed at enhancing interbank operations. Known as the Interbank Spunta project, the 14 banks chose the Quarter distributed ledger technology platform developed by the R3 blockchain consortium. The application was developed by NTT Data Italia, while decentralized storage platform SIA provided the node infrastructure. During the trial phase, which lasted for a period of 10 months, around 1.2 million transactions were processed, according to ANSA. Speed, efficiency, and transparency. Some of the improvements expected to be made using the blockchain solution include boosting transparency, speeding up processing times, and enhancing efficiency with regard to the exchange of information and verification of details. At the time when the trial was announced last year in December, the CEO of R3, David Rudder, indicated that these were the goals. Quote, working with ABI Lab, we are using Quarter to automate the matching process, helping Italian banks avoid mismatches and improve efficiency and accuracy across the board. This this POC, or point of proof of concept, will demonstrate how easy it is for banks to reduce their operational and back office costs while saving time and communication securely by utilizing DLT. End quote. The Spunta project is being operated by ABI Lab, the Research and Innovation Center of the Associazione Bancaria Italiana, loose translation Italian Banking Association. In the next phase of the project, blockchain applications will be used by the banks in everyday transactions. The 14 banks falling under the umbrella of the ABI include Italy's second largest bank, Intesa San Paolo Credit Bank, Green Bank, Banco BPM, BNL, Banca Millennium, Banca Monte dei Paschi di Siena, Banca Popolare di Sandrio, Banca Sella, Banca, Credito Emiliano, Credito Valtillanese, Icrea Banca, Intella, San Paulo, Nexi Banca, and Ubi. Intercountry financial transactions. Besides its use in interbank operations, the open source Quarter platform has also been employed in cross-border payments. As previously reported by CCN, last year in October, for instance, 22 member banks including Barclays, BBVA, Commerce Bank, DNB, HSBC, ICBC, Intesa, KBC, KB Cookman Bank, KEB Hana Bank, T6, Shinhan Bank, TD Bank, US, there's a lot of banks, US Bank, and Worry Bank join hands with R3 with a view of enabling international payments. Rudder at the time hailed it as highly disruptive for organizations that do business across borders. International payment systems have struggled to keep pace with the explosion of global trade. I want to read this again. International payment systems have struggled to keep pace with the explosion of global trade and the globalization of the world's market, said Rudder. This solution is a game changer for any bank or a company whose business relies on making or receiving cross-border payments. This article says a lot. 14 Italian banks complete interbank transactions on R3 blockchain Concordia. There's a lot of banks in this article, a lot of banks, which means more and more banks are coming online to this blockchain technology, cross-border payments. The most known cross-border payment technology out there is XRP, Ripple's XRP, and the XRP and the XCurrent technologies. But the census said, these banks are having trouble keeping up with the explosion of global trade and the world becoming a global one. And just like years ago, you send money through Western Union, MoneyGram, or any other company like that. It take days, but now it's dwindled down to the same day, same hour, a couple seconds, couple minutes. These banks have to catch up with this stuff or be left behind.
It's interesting that the Italian banks are getting involved because you know, Italy is one of the pigs. Portugal, Italy, Greece, and Spain that are basically insolvent and suffering and are on their last leg, financially speaking, within the union in Europe, that could actually fall apart. Um, so it's interesting to see that Italy is taking an approach to you know, to adopt new technologies to stabilize their markets. So with that being said, this is actually positive news when you have big brand names actually on the docket for you know, for transactions.
Hmm.
So let me see if I can break break it down to something more tangible. Like, because I remember when the last financial crisis, Greece, they really had, went through it. So with this system speeding up transactions, um, so it's going to offer just so more people will be able to get out of their currency to get to a safer, what they regard as a safer currency quicker. Does that help with that?
I would say that there will be able to, it's cross-border payment. So Italy to, say, Switzerland. Someone in southern Italy want to send money back to their parents in Switzerland. They're going to be able to send it instantly instead of waiting a couple of days, even though it's the next country next to Italy. It's basically speeding up cross-border payments, and also in the article it said it's reducing a lot of money spent on the current infrastructure in these banks.
Fees,
Um, the
fees.
right fees and other things that they may spend money on, whatever they may be, that they can eliminate. Say again.
Remittances.
Yes, yes. With this blockchain technology, it's more efficient.
Right. Also, with this information age we're in right now, you watch on TV, you see some funny stuff with how your currency is moving. And if you don't trust your own currency, you can get out of it that day.
Yeah, yeah.
That's my mind is recalling back when in 2011, that's when the dollar started rising. But just before that, there were a couple of major Hollywood stars when they were negotiating their movie contracts. They wanted to be paid in euros.
Yeah, I remember that. I remember that.
Yeah. So with this kind, now you won't even really necessarily have to specify that if they can change from one currency to another quickly without a lot of fees. Am I on the right track with this?
Hmm. Because it's so fast. Well, specifically XRP, it's so fast that the settlement is so fast that it's it the settlement is so fast that the volatility of each of the currencies,
Right.
it not bypass, but it's so fast that the volatility doesn't affect it.
So let me ask you guys this.
No clearinghouse, because there's no clearinghouse. It goes from sender to receiver, right? There's no in between. So there's no volatility.
Yeah, it can go send to receiver, or if it's going from one bank to another, it's just within seconds or minutes where the volatility doesn't affect. Oh, you sent me $20, but now it's worth $18. It just circumvent the volatility.
Right.
Go ahead, Dollar Will.
I was just beyond money transfer. I was just thinking in terms of if we got like a wad of money, 25,000, 10,000, or something like that, and some good decent 100,000. Yeah, let's think big. And the dollar is topped out. You have your money sitting in the bank, and the dollar is losing value. I could see a case where a lot of intelligent Americans going to want to move their money out of the dollars into something that's appreciating, so that you'll be able to make money just by having your money in a different currency in the bank. So your savings account will grow in value just because that currency is appreciating.
So what you're saying with this technology, the efficiency and the speed of this technology, smart investors who are familiar with forex trading and currency trading can see, well, the dollar is declining, but this, let's say, Swiss franc is appreciating.
Or cryptocurrency.
Or cryptocurrency, because you can go in and out of it real fast.
Yeah.
So such smart investors can say, okay, the dollar is tanking right now. Let me take my $250,000 out and put it into whatever top cryptocurrency that's appreciating, and not only gain what the small loss that you took, but even more.
Yeah,
and you can do it within seconds.
Correct, and you can reverse it when you need to in seconds. So the thing about it, when these currencies trend, they trend for years. We're talking 7, 8, 9 years. So it's not like something you would have to keep messing around with. You know, when the dollar
multiple times a day. Okay.
You might not even touch it for years.
I see what you're saying.
You know, it's not like you would necessarily be busy moving it all the time. If you know how to trade, and okay, well, if the dollar is going to low, I'm telling you now, whenever we finish this little run in the dollar, the dollar is going to trend over a long period of time. It's going to trend south. It's going to go below the 2011 low, year 2011 low. So it'll be years. And so, but over that time period, your money, every statement, you'll have more money in there because it increased. It's be interesting.
That's a good perspective. I like that.
Yeah, a lot of countries, when you hear about, these countries that set up shop, American businesses that set up shop in other countries, that's part of what they're doing. Because these companies have a lot of cash, and they don't want that their millions and millions sitting in U.S. dollars if the U.S. dollar is losing value. So when they talk about company X, Y, and Z, when Trump talks about that company coming back to America, bringing more their headquarters back to America and bringing the money with them, that's what they're talking about. They want that money sitting in a U.S. bank. But these companies are smart. They're not going to have the money sitting in the U.S. A lot of them have brought money back now because the dollar is rising. But when the dollar finishes this run higher and starts to go south, they're going to leave again. They're going to take the money again out of the country. Again.
You know what's interesting about that is that's true, because when the recession happened, right, and this is I was working, I was doing service on a client's house, and she was a wealthy woman who lived in Palm Beach Island, and she was every day I would go there. She was always watching the financial markets every day, and I asked her, like, okay, is this the whole thing with the crash or the recession, is it affecting you? She was like, literally, she's like, all I did, she's like, I'm good, but she's like, all she did, she made sure she set her money outside the country, and she said once things turn around, she's gonna bring it back. So, hey, Dollar Will is saying the truth. Like, that's what a lot of these wealthy people do, is put their money out of the country, but now they put their money out the country, and then they're gonna make money on their money while it's sitting out there. It's a win-win. And then another thing too is when it comes to remittances, right? I remember we read an article maybe a month and a half or 2 months ago about Kenya, right? And I think it was like up to $200 billion in remittances, right? And I'm like if they're able to implement some of this in countries such as like Kenya or these other countries where a lot of people leave and get an education in America or start business in America or other Western countries and send money back home, that's going to save a lot of money in remittances, and also it's going to shut down. It's going to disrupt that market as well. So I think you guys saying some good points on both sides of that.
Yeah, I guess the point I was also kind of trying to make is that individuals, regular, common folk like us, are going to end up sitting down with our financial advisor trying to exercise some of these strategies that these corporations and these millionaire, entertainers exercise by moving their money into an appreciating currency as opposed to one that's going the wrong way.
I think a good opportunity right now would be to create. There's another way in place, but even create your own company that is able to transfer money for clients, right? Like that'd be a great business idea because it's gonna happen, right? People are gonna be want to transfer money. People want to do something like this on that type of system. So it's like, why not go ahead and get into that type of industry, right? Learn about it in the industry and and then create your own niche, create your own market there.
But I think that's already happening now.
Okay.
And you're also seeing alternative methods such as using web browsers for cryptocurrency mining and as well as payments. I think Opera was one of the first web browsers to actually adopt this function. And I think Firefox came out after with this whole functionality for one click wallet inside the browser itself. So there's a lot of alternative methods for payments that's happening right in the palm of your hands. I think your smartphone has enough power in it to actually become a digital wallet and actually have NFC payments, which is near field communication. Every smartphone has this except for Apple that allows for tap and go payments on point of sales operations or even phone to phone operations where you can tap your phone to the next phone and actually make a direct payment.
Yep.
So what do you think is the best way to someone to capitalize on something like this? To capitalize, because they already got things in place, but what can be done for somebody who wants to start a business in this type and make money in this arena? Like, what do you suggest? Like, what do you think is a great opportunity?
Well, you have to be organized as an institution first. It's important to understand that you're not going to be able to get away from the taxation of the United States. So putting that aside, you have to be organized as a financial institution. I mean, the correct term is called fintech, right? So it's a financial technology institution. Once you organize yourself like that, you'll be able to start processing payments and things like that. Because in the United States, if you start processing payments and transactions of money, you start to fall into SEC regulations and other Fed regulations that you need to abide by. And if you don't, you can find yourself shut down pretty fast.
Well, I think, Alex, go ahead, Mike.
My personal opinion based on observation is that I think going forward, everybody will be a walking fintech. Everybody can establish themselves on their phones, on their tablets, as some form of private banking institution, and you can start doing microloans and things of that nature, and become your own personal bank with these cryptocurrencies and the blockchain itself.
You're bored here, Mike.
Own institutions, small banks. Can you hear me?
Yeah, we hear you.
Yeah, you're borging a little, but we heard you.
Yeah, I just want to agree with what Mike was saying. The crypto sphere allows individuals to actually become banks themselves. So,
yeah, that's the whole purpose.
Yeah.
One of the purposes.
Yeah.
And of course, I'm going to say somewhere in here, learning to read a chart is very important.
You can learn to read the chart on your own time if you like. It's not there.
Let's go ahead and get to our Last article for tonight. Let me share my screen here. Excuse me, I didn't hit the button. Article comes from CNBC.com. Title: 40% of the American middle class face poverty in retirement. Study finds. Written by Elliot Dinkin, President CEO of Cowden Associates. Some 40% of middle class Americans are at risk of poverty in retirement due to depressed earnings and asset values and increased healthcare costs. Nearly 3/4 of workers now plan to work past traditional retirement age. Both workers and employees must focus on a fix, the former by saving more, the latter by ensuring that defined benefit plans are efficient and sufficient. Published 12 hours ago. Nearly half of the American middle class face a slide into poverty as they enter their retirement. A recent study by the Schwartz Center for Economic Policy Analysis at the New School has concluded that risk has been driven by depressed earnings, depressed asset values, and increased healthcare costs, causing 74% of Americans planning to work past traditional retirement age. Additionally, both private and public pension plans have been allowed to become seriously underfunded. So, what can be done? Fun- Fundamental changes in the structure of the U.S. economy, combined with increased health care costs and lack of savings, have created a financial trap for millions of Americans working workers headed into retirement. Roughly 40% of Americans who are considered middle class, based on their income levels, will fall into poverty or near poverty by the time they reach age 65, according to the study. The study also concluded that if workers aged 50 to 60 decide to retire at age 62, 8.5 million of them are projected to fall twice, whoa, below twice the federal poverty level, with retirement incomes below $23,340 for singles and $31,260 for couples.
Dude, did you
Further,
say twice?
2.6 million of,
You
yes,
said twice?
twice.
Damn.
Yeah, further, 2.6 million of those 8.5 million generally mobile workers and their spouses will have incomes below the poverty level, 11,670 for an individual and 15,730 for a two-person household. It could be debated as to how this happened, who is to blame, who is ultimately responsible for retirees' well-being in retirement. Most importantly, though, employers and employees need to focus on the fix. Personal savings is obviously this is sad. It's obviously a needed conversation, and sponsors of pension plans, whether corporate, government, or multi-employer, need to ensure they are doing their part. Not coincidentally, older Americans increasingly continue to work longer than their forebears. More than 20% of the workforce in the United States is 55 or older, a historic high, and that percentage is expected to increase. 74% of Americans now say they plan to work past traditional retirement age. So, how will this impact employer pension plans? Are there solutions? What do they look like? What do they affect and how? Employers need to complete an in depth analysis of their business models, risk management policies, benefit offerings, and financial options through a total compensation approach. A defined benefit plan should be managed like a separate line of business. It should have budgets, forecasts, and a strategic plan. The magnitude of the issue and its prominence require this approach, as the plan is a as the plan is a use and source of cash, creates volatile liability and expense, and causes negative consequences, often at the worst time in business cycles. The process involves a variety of areas regarding benefit design, cost, risk management, cash flow, taxes, competitiveness, and labor management. Oh, man. Excuse me. Finally, pension plan sponsors must continually monitor investment strategies. Oh my God. Finally, pension plan sponsors must continually monitor investment strategies, the impact of potential regulatory changes, including funding and accounting rules, appropriateness of assumptions, and development of funding policies to ensure they are appropriately managing their risks and cost issues, but acting in the most prudent manner for their current employees and current retirees. Goodness.
That's a
40% of American middle class. Yes, I was, and I couldn't help but think that as I read it, as I read it, 40% of the American middle class face poverty in retirement. Study concludes, and I'm
Lionel, we don't hear you.
Yeah.
Oh wait, okay, wait, he borged out of it.
just,
Hey,
Out.
Lionel, can you repeat that? You borged out there. Can you repeat what you just said?
oh, I said that that 40% is a conservative number. I can see that figure easily over
Absolutely,
50%.
absolutely.
I'm gonna tell you that figure, October 12th, 2018. Here we are before this crash really has happened. That figure means absolutely nothing. It's far worse than that. Okay, I mean, you have to factor in the amount of financial apathy, or when it comes to investing, and people have a set and forget it attitude, or as what's the word, hodling.
Mm-hmm.
You don't hold on for dear life in a downturn, and when it comes, it's a lot of people that are not going to sell, and the information they're going to get on television is going to tell them that they should hold on, and they're going to trust what they hear on TV, and it's not going to end well. So don't listen to us. Don't listen to the TV. Take advantage of get your financial get you a financial advisor. Go to the site that Lionel
Yeah,
that link,
CFP.net.
CFP.net. But also, if you're a lot of times our banks and credit unions will offer free consultations, and we don't go and get the free information. Get it. A lot of times during open season, at your job, when you have to pick your benefits and you're coming up on that period right now, they always have somebody from the pension plan administrator, or the financial, I'm sorry, the retirement plan administrator. They always come and do a open presentation and make themselves available for questions. They always will give you a period when you can come and get some free consultation. It's your money. They're working for you, but we don't take advantage of that information. This is not one of those times. If you listen to this show, you are already the exception among people your age. You're likely the exception in your family. So you're going to have to not just think for yourself, you're going to have to think for others. You're going to have to think for your friends, your family, your parents, all the people around you that are likely apathetic. So you're going to have to push them to get this information, and not just sit back and think that it's just like the last time. This downturn will be nothing like the last time. Nobody alive will have experienced anything like what we are about to see.
And to your point, Dollar Will,
Go ahead, Mike. I'm sorry. Go ahead.
And to your point, Dollar Will, people holding on to their houses, like there's something to be gained from holding on to your house in a up market. It's a seller's market right now. If your house is worth $500,000, what the hell are you still waiting, still sitting on it for? You might as well get out of it right now.
Right. That, yeah, definitely. Go talk to your financial advisor and talk about that. Talk about there are other options. People will get a home equity loan. There are ways of taking. If you're I think it's 65 or older, you can get a reverse mortgage. And reverse mortgage, the bank will give you like 60 up to something like 65%. But talk to the financial advisor; they'll give you cash. I got one for my father. Your parents never have to pay the money back, never. If you have the surviving parent, let's say your mother and father get a reverse mortgage, one of them dies, the other one gets to live in the house for the entirety of their life, and then what happens after that? The kids or the people who would inherit the house, they have to pay the bank back that 65% that their parents took out. And if they don't, the bank claims the house. But your parents get to live out their life without being in poverty. And it's better to take that loan out while the house is worth a whole lot of money than waiting until the value disappears in the downturn and then going, to talk about that. So this is the time to get proactive and get with a financial planner, financial advisor, and look at all of this. I guarantee you your parents are apathetic. I guarantee you they are. So you're gonna have to get ahead of this situation and twist their arm and make them sit down with somebody, so that so that what they spent their life for doesn't just go up in smoke. For my family, we decided that we would rather our father take his equity and live out his life without any financial stress, as opposed to stressing about leaving a house to us. We punted. He got the money. If we want to have that house, then we'll have to come up with the money to pay the bank back. If we don't come up with the money, then the bank takes the house. So that's an option. Look, it's called reverse mortgage.
Yeah, I never really looked into what I've heard of a reverse mortgage, but never really looked into it.
They have free information at AARP. You can, but again, your financial advisor will be able to help you with all of that. This is when it's calm, like now, or relatively calm. This is the time to get busy on that kind of stuff. Talk about whether you want to sell the house, whether you want to maybe just take the equity out. Some people take the equity out and invest some of the equity in the house, in the stock market, in safer areas like the consumer staples sector that generally goes up when these other, when real estate and tech and all that high flying stuff goes down. I mean, your financial advisor can help you with all of that. And so that way, the money that you would have lost in the value of the house going down, you've taken that money out and moved it to an investment that will rise, and hopefully you break even at the end of the game. And say a couple of years later, you take the profit from that money you invested, you can hopefully pay the rest of the house off.
I would even say look into ask your financial advisor about annuities also.
Yep.
I like how you guys keep mentioning, contact a financial advisor.
Yeah.
That's right, because we're just some YouTubers.
Right, yeah, we on these YouTube streets. But annuity is something you pay into, and you reach a certain age, it pays you back until you gone. But that is also on top of. Oh, go ahead.
No, I didn't mean to interrupt you. I was just saying I was sharing my screen. One Ghanaian CD is worth 21 cents on the dollar. And if you have, your house is worth $500,000 right now on the market, on the seller's market, you could live like a very wealthy king over in Ghana. It makes no sense. Me personally, and I'm not a financial advisor or financial planner, but my goal is to save up a certain amount of money, and forget about 401k because mine's just gone since 2008. But to actually put my investment in my retirement into Africa, into one of the West African states, or even one of the most English speaking states that's more tolerable towards Black Americans, and actually live the rest of my life there. And to me, it doesn't make any sense to live in poverty. According to that article, senior citizens living in poverty, like, what kind of lifestyle is that to live? Who wants to work their whole life just to live, eating out of a garbage can?
Yeah.
Or eating cat food.
Yeah.
Okay. But I'm telling you, the people who stand the highest risk of being in that category are the people who are going to hold on for dear life or sit and do nothing.
Investments, learn about investments. I just mentioned the noise. Ask about this stuff. There's other ways you can put money away for retirement. There's ways. It's just like you said, Dollar Will. A lot of people are apathetic. They think that, it's sad to say, but they think that investing is tantamount to devil worship for some reason.
Well, if you listen, it's not your fault. It's in the school system. This stuff we should have learned. The school system should have taught us this, but they didn't. But so now you know that, just like you had to teach yourself your real Black history. Well, now you have to teach yourself, some financial literacy. That's just what it is. So you have no excuse. Now you gotta get to work on it.
Right, and I want to say something. I'm pretty sure other Black people experience this. You learn this stuff, and you become someone proficient in knowing, hey, I know the gold market goes opposite of the dollar. You know these things, so you try to tell this information to your kinfolk, to your parents, siblings. They don't listen to you. You want the best for them. Like we're doing. We a bunch of brothers that come together and we trade information. We talk about it, and other brothers come on. We tell them, hey, if you want to do this, think of this route. But you have people that you have even your own family members that doubt you, that don't listen to you. It could be the basic of information. I'm not talking about stratospherical information. I'm talking about basic information. Hey, you don't need that second car. Hey, you don't need them Gucci loafers. You know, they ignore you. They think that
Or
it's
if
a
you're
gift
gonna
and a
get that,
curse.
if you're gonna get that second car, pay no more than $2,500 cash for it.
Yeah. It's a
You know?
gift and a curse.
Yeah.
Because you know it.
You have to be the savior. We all have to be the savior for our family. I mean, when I think about how much money I need for my retirement, I'm always thinking about, a couple of other people that I might have to save.
Yeah. Yeah, you got to save for. Ideally you don't want to do that, but you have to. You got this information, and now you look at your family members go down the drain financially. And you tell them, hey man, it's hard, man.
Well, look, I mean, I think that's the reason why I largely promote, especially men, getting involved in the industry and getting involved in business, because when you're getting involved and you're doing things on that level and that scale, you're not financially, you're not thinking like an employee, so you're not going to be compensated as such, right? So you'll be compensated as a CEO, you'll be compensated as a business owner, you'll be compensated as such, and then in that regard, because of how you're being compensated, you can take care of some of those family members who maybe don't quite see things. But I don't know. I'm of the viewpoint, because I used to have the viewpoint of, I need to do this because I need to save fill in the blank or whatever. But when I started thinking more like a CEO and just saying, okay, well, look, if I create a business or an entity and its success is dependent upon it making the most money it can, then by virtue of that, I'll be able to take care of people. right? But my priority is actually on the business.
And Delaware, I agree with you. Me, I'm a millennial. I'm into investing. I know, and it's sad to say that a lot of millennials are going to have to take care of their parents. Their parents are going to live with them when they get older. Even other family members are going to have to live with them. The people, the millennials, and the next generation after us, Generation Z, that are into this investing and making sure that they say again.
Oh, multi-generational living.
Right, exactly. Multi-generational living. You know, the people that are into investing know how to save up money and know how to put their money and do the charts. Us type of people, we're gonna have to house our parents, our siblings, our one or two other people in our family. We're gonna have to do that, and that's the future. That's what it is.
Yeah, I would say the near present.
Yeah, near present. Yeah.
Yeah.
Because after this downturn, you can't go back to McDonald's and get that same job. After this downturn, you can't go back to Macy's and get that same job. You can't go back to Walmart and get that cashier job.
Lionel,
It's not going to be there.
Lionel, I told some coworkers, this was about 10 years ago. Because again, I said, you know, once I started reading these charts, it changed the way my brain works. It's just like, it's hard for me to even talk. I don't make sense when I talk to people who don't read charts. The stuff I say just makes no sense to nobody, because I'm not going by what, my own logic. I'm looking at the data. And I told them about my friends and coworkers who I talk stocks with. I told them, I said, you're gonna notice that you're gonna pull up in the drive-through at McDonald's and you're gonna notice that there aren't any more kids. You're gonna see.
You're gonna notice there's no cashiers either.
Yeah. You're not gonna see teenagers working at McDonald's. When I was growing up, McDonald's was a teenager's job. Okay.
I worked at McDonald's twice.
So you're not gonna see that. You're gonna see senior citizens and older people in jobs that used to be done by teenagers, because people are gonna get pushed out of the other job and they're gonna start competing for those types of jobs. And sure enough, I'm not even surprised when I pull up to the drive-through window and I have a senior citizen. I'm not, it's normal now.
Or a senior greeting you at Walmart.
Right.
You know, you can't go back and get that Uber job because Uber is going to have autonomous vehicles. You're going to have to pay your parents' bills, not cell phone or light bill, their credit card bills.
And then factor in that student loan debt is, being a family burden now, because you can't go out of your parents' house. You got subprime mortgages going around. People's houses are underwater now, and their mortgages. It's I don't know. I just don't personally think. Yeah, I just personally don't think that the United States is a place for Black people to be retiring. I don't think this is a place for you to retire. It's a place for you to do business, but not a place for you to spend your senior citizen life. I mean, if you're 50, if you're 45 right now, you should be planning for retirement.
Yeah, and we're not trying to scare you. What we're trying to tell you is planning is the perfect way to avoid all of this.
Yeah, we're not trying to scare you. We're trying to prepare you, And
exactly.
what Mike said is right. I'm going to tie it back to what I said earlier about the financial planning we were talking about just now. You guys mentioned that people are going to end up moving back home with their parents. And there's no shame in that. It's not, I try to tell, millennials, don't take that personally. That's not like a failure on your part. You were just born at the wrong time in the business cycle. That's all. It's not personal. But when you do send your parents to that financial planner, you need to go and sit down there with them, because if you're going to be living at, let's say your parents get a reverse mortgage, if it's just your mother and father in the house, then the property will go from to the surviving parent, and no payment has to be made. But once that surviving parent dies, that money has to be paid back. But if you're going to be living in that house, then maybe the reverse mortgage isn't a good idea, because you're going to need to live in the house. So you need to be a part of that family planning situation, so yeah, get your parents together and consider your financial status along with your parents if you think you're going to be depending on them for any kind of financial support. So when you send them to that financial planner, you need to go and talk to the same financial planner so that the decision about the reverse mortgage can factor you into it.
Or they depending on you.
Go ahead, Ulysses.
Like that. I was gonna say, you go with something like that, and then you say, hey, well, look, when both my parents do pass away, in the time that I did spend there, not really paying much, I did stash away something. So when they go, I don't necessarily want to be saddled with a mortgage. Maybe I want to travel or something like that. That's where you'll still become part of the conversation with that financial planner.
Yeah, you have to know, like you say, if you know the deal and you still decide to go with the reverse mortgage, you better be saving money while you living there with your parents, so that you can have some money when it's natural, or you might save up enough and maybe have a job by then to be able to qualify to get a mortgage on the home to keep it. So you would put a mortgage on the home and pay off the reverse mortgage.
Or I was gonna say, maybe during that time you started a business. You utilize that time to bootstrap a business, get it up to a point where, again, your parents pass on. Then it's like, well, look, you know what? Actually, a payment on this based on what business is making isn't all that bad. I'll take it.
And your cryptocurrencies took off, and you're rich, and none of this is the issue. And
Cash out
because you listen to the Black Brain Trust.
Oh yeah. Shout out Dollar Will. Shout out Ulysses. Shout out Mike. Shout out everybody on the panel. How you doing? Go.
Oh yeah, what's up, Nagone?
What's up, man? I was trying to find the link, man, and I got it. You got it. My box is so stacked up, and then you guys got a running set of emails. Like, yeah. I'm like, where the fuck is the link at, man? There's 101 emails in here. Oh my gosh, my email box is just a mess. But anyway, what's up, brother?
What's your take on this retirement deal?
On the who?
Yeah, man. Retirement.
What's your take on this article about retirement? 40% of Americans will be below, poverty level twice below going into retirement. So you're talking about people eating out of dumpsters and eating cat food.
Yeah, that's a fact.
And working later in life.
That's been good. That's been a trend that's been going on for quite a while right now. So you have a lot of people in their 70s and all that kind of stuff like that actually back at work. So yeah, that's going down right now, brothers. Going down right now.
You know what bothers me about that, man? It pisses me off because those people right now suffering are the hardest generation out there, right? They put the most work in, right? So it's like for them to be, at the last leg of their life and then be in poverty, bro. That's a shame, man. And then people here rooting certain leaders talking about, we're making America great again. What's great about that?
Or some fucking jackass in the White House showing a goddamn A1 plane.
And you got people can't even
jackass.
Well, he's giving all the money to the military and to the super wealthy. We've seen that. We've seen it with his whole tax game that went out there, billions of dollars, trillions, then a trillion went to that. Didn't go anywhere to any levels of Social Security or any kind of safety net type of game that you have going on out here. So
Nagone, a lot of people aren't going to be but a leg going into 59, 60, 61 years old.
Nah, in fact, people are just going to be laid. That's about it. Because folks, They just gonna lay folks out.
Lady flat.
That's the game that's going down.
And I'm no certified financial planner or financial advisor, so I just want to kind of pitch this out there that I wonder if Black people may need to create, instead of an individual retirement fund, you may have to create a community retirement fund so that people stop, basically mooching off each other and have a system in place based on the public.
Actually, if we had our own social security program for ourselves, that would actually work. A community program, yeah, that would work. And that's about, I would say, if you're looking for an answer, that's about the only answer that we really have coming out here, because what's getting ready to come down is buddy.
I mean, what's wrong with the couch plan we have? Your couch.
Yeah, Madden. Playing Madden games.
No, we're gonna sleep on your couch.
Well, I mean, this is supposed to be do that as well. It's going to come down to that.
Retirement, but yeah, this is supposed to be for retirement. But you got Pookies and Ray Rays out here, at 25 years old, are already on the couch. So, I know myself was looking at a video, and this is the pre-show a few hangouts ago, and there was a person, brand new pair of Jordans, but sleeping on the air mattress.
Yeah, air mattress.
Yeah, basically sleep on an air mattress, and they backpack on their back, I guess, and and they're just they're hanging out. It's all good, listen, but for them, they at least have time to try to get their act together if they could. But for a lot of old folks, it's going to be kind of rough if you own a house. If you own a house, something else like that, then you're talking about, if you don't have money, you don't have enough income, then that means you have to sell that and, live a lesser type of deal. And, it's a lot of stuff. The social safety net is getting ready to get taken out, and these guys are getting ready to grab it and take it. The super wealthy getting ready to grab it and take it. And I suspect, we're going to be looking at some social unrest.
I think what we're going to see, I think the baby boomer and the older Gen Xers, one thing is they own a lot of property. Yeah. I think you're going to see a lot more subletting in homes. People are going to be renting out rooms more than than we're accustomed to seeing. You're going to, every third person is going to be renting somebody's basement out. Because in a lot of cases, you might prefer to live in the basement of somebody's home than a big apartment building.
Well, listen, same deal in my house, whatever, however it goes, push comes to shove, and it comes down to that. That's exactly what I would do. Bring people in, or family members or whatever, come in, help pay, do whatever. Push come to shove, that's where it's going to come down to, man.
So clean up that junky room y'all got in y'all house. The one where you just put all the extra stuff and you just like a time capsule. The room.
I foresee a lot less people going into retirement homes because you can't afford it, and more either children staying with their parents or parents staying with their children. And the intergenerational living.
Dollar Will, think about it. You're in your 50s. Do you have your own house?
Oh, I sold a couple years ago. Yeah, I'm 54. Yeah, I had one, but I don't want one now. I mean, I'm trading the money that I sold.
You trade it?
Yeah, I'm trading it now.
Do you have a retirement plan and all that? That's
what yeah.
See, that's what people have to have. You're gonna have to be thinking about retirement plans and this kind of stuff. That's how that works, man.
Oh, and this child support and divorce stuff, it doesn't help either. It doesn't help. You
okay, if you're not in that situation, don't get into it now.
Yeah, don't get, because you gotta pay your wife automatically. Well, if you want a system, you're gonna have to come out of pocket. You gotta pay your lawyers, her lawyers, and if you've been married so long, you got to pay her maintenance for the rest of her life.
Hey, listen, pardon the expression, but fuck that bitch. You cannot sit back and take on no broad and deal with her bullshit. That shit is crazy. You gotta be.
If you don't wrap it up, it's a wrap.
And bro, she ain't gonna be thinking about your ass. So at the end of the day, you have to really be looking out for yourselves because folks ain't gonna be looking out for you.
Well, I'll be real with you, man. Like, this is the reason why, a brother like myself pushes business heavy, because if business is your priority, then pussy ain't. And pussy will just be something that you get when you want to go get it, but your business will be your priority, and you'll always protect your priorities.
Yeah, you're really gonna have to do that. I mean, so the retirement for a lot of people, and I said the social safety net, man.
It's gonna
The
be
elderly
gone.
and so forth is rough. Go ahead, bro.
It's gonna be gone.
Yeah, it's that's coming to an end, and it's because you have and where's it going? It's ultimately think about it. It's going into the pockets, man, of the 1%. That's what that shit. That's the ill shit. That's the ill shit. The major corps, the big boys, they're taking it all down. They're taking that shit, man. That's the ill shit about it. That's what I'm saying. They're saying, wow, look how this thing.
Yeah, I
Well,
was. Go ahead, bro.
Jack and myself have been, pushing emails behind the scenes, talking about tiny houses. You starting to see a whole lot of adoption of people just going into a small little shoebox to live the rest of their life. That's just the way it is.
Listen,
I've been out now.
I've been reading about people eating cat and dog food since the
Years.
since the late '80s, man. That old people are like that. This has been going on a long time, and this is going to continue. So I know a lot of us who are sitting back here thinking, "Hey, man, they're not thinking about it better because."
I want to put this into perspective a little bit better. I read an article years ago which said the first person to reach age 150 has already been born. Not to say a lot of people are going to live to that age, but the potential to live longer is already been established, which means when people retire at 65 or so, they're living longer and they're outliving their retirement
The
research
retirement ages are going to go up higher. That's what they're going to
to the
do.
70s.
You're going to have 70, 75 to retire. You're going to
Right.
be happy. So, okay, so because they really want to move the retirement age up to 72. That's what they're trying to. That's what the government is looking at. They're trying to do. So they're trying to extend that for longer because if you're living to 110 years old and that kind of you're not gonna have the bread. You ain't
And
gonna go.
right. And also let me widen this picture that I'm painting. People, I've seen lawyers still practicing law in their 70s.
Yes, sir.
People are living longer, people are working longer, people are still being born. These technologies are coming out that are no matter. And I hear people saying, "Yeah, this autonomous vehicle is not going to stop. It's not going to take your job. It's just going to hire more people." No, it's going to take your job, which means more people. It's going to create a bottleneck where you have a lot more people vying for a lot less jobs.
Well, I'm going to say this. This has actually been people have been talking about automation taking jobs from people. Literally since the turn of the 20th century, 19th century. In the 1890s and so forth, we started seeing a lot more. We started seeing a lot of automation coming through, especially on the farms and so forth. People were like, here comes automation. We're done. It's over. We started seeing that in the 30s when we had more machines and stuff like that. Being employed now in the factories and so forth, as we started to see this happening. Oh shit, man! After a while, this is it, man. It's gonna be it. We ain't got any more. Ain't gonna be no more jobs for people, whatever. And what we've seen every generation is there've always been a new set of jobs that have come up. We've seen shifts in the economy where people have trained and done different things. We're gonna see the same thing here. So I believe the doom saying, well, automation's coming. It's over. They've been claiming this for the last 115 or so years, and it hasn't knocked out every job. So are we going to see that today? No, I don't think so. I think we're going to see certain things change, and then people are going to just have to shift to some other areas. I remember I was in a debate. I think I was debating with it was a BGS. I think I was on his channel. This is a while back, and he was talking about, well, you got 100 million people out of work and all this. And then the real number was 94 million people were out of work. Then I broke that number down as to how they came to that 94 million out of work. And then they literally started judging that from the age of 15 years old to 75. And then when to make a long story short, when they started to break it all down, about 22 million people were out of work. About 22 million people were not supremely gainfully employed. And it just showed you that there was some shifts in the economy, some people that had not made some adjustments, but other people were coming in. So the actual number of how it really looked, did it really look as bad as it was? No, it really wasn't that bad. So I started to look at it again and said, okay, so that was a lot of hype. So that's not really what's going on here. And I say the same here. We're going to have some shifts in the economy. There's going to be some moves, of course, that we see in every generation, but they're going to be new jobs in other areas that people are going to be moving into, because automation is not going to be able to take every single type of job that's out here. So it's not going to be able to do it. If you're expected to drive a cab, that may end. You have to shift into something else. But you're not going to have these large swaths of people that are going to be totally out of work, because we're not looking at that right now. Anyway, go ahead. Somebody's going to ask you something. Go ahead.
I was going to say, just to piggyback on what you're saying there, because you can look at every other industrial wave that we've had, and it's the same thing that you've said. Okay, you have these industrial shifts, and what happens is that one set of jobs are eliminated and a new set of jobs are created. Now,
exactly.
Go ahead. Yeah. No, that's all I wanted to do. I just wanted to follow that up. That's absolutely correct. And all it takes is really just some objective analysis, right? So one says, okay, if automation and all these different types of things are going to replace a current set of jobs, then what are going to be the jobs to replace those jobs? They're probably going to be things that have something to do with automation and automated technologies and things of that sort.
Yep.
Now, I agree with you. Yes, there's going to be new jobs, but the key thing you said, people are going to have to change.
Yeah.
There's going to be people that don't want to change. Okay. And also the pay these jobs are going to pay the salary.
Mm-hmm. What about it?
People will a salary be enough for people to live on?
Well, I would probably think that it would be a living wage, because I'm taking a look at just the minimum wage standard that we have going up now, where a lot of people are pushing it to 15 an hour and so forth, just to have a living wage. I suspect that those kind of moves will continually be made. There's going to be some shifts going on here now, because I believe this unsustainable kind of game we're playing with wealth consolidating at the top, I think there's going to be a shakeup on some of this. I think there's going to be a shakeup on some of this, and there's going to be some leveling of this game over the next few years. I certainly believe that. I don't think things are going to continue to go just in this direction, because it's highly destructive. So I think there are going to be some changes. Just because I think we're just going to have to do that. The thing that concerns me more than anything else is the way our economy is structured with respect to, like I said, with some of our institutions of relief, like Social Security and so forth. Are we really can our country really afford to let Social Security be destroyed? Can we really have this bottom of the system dropping out? That's going to be a political, economic issue, and I don't know if we're going to go headlong into that. I think some people are saying that, but I think we're going to have to do some things to save that. That's the only thing that I'm really concerned about. The stuff that you're talking about, as far as older people not eating cat food, not being able to live, and having, I don't know if we're going to really, as a society, are we going to stand back and just let this happen wholesale? Even though it has been happening, I foresee this as being a much bigger political problem coming up, and I think we're going to have to come up with some solutions for that. That's where I think our real issues are going to be, with the aging of our society and the culture that we have. That's going to be a big issue. We're going to have to deal with that sooner than late. But that's where I foresee the kind of big issues are right now, as far as automation coming down, and everybody's going to be out of work and all that. I've been hearing this. Literally, this shit's been being said, and that's been the clarion call for the last 115 years, and that just has not shown itself to be entirely accurate, and I don't see that as being entirely accurate today.
I'll push back against what you're saying, Nagon.
Go ahead.
We're seeing now Home Depot roll out these automated registers. the last 30 days, and people who used to work those registers are no longer there anymore. And you're seeing it with McDonald's and Burger King. Burger King is now doing deliveries. I saw that they're doing a pilot test for drone deliveries of Whoppers and Whopper Juniors and stuff like that. McDonald's, basically getting rid of the drive-through, for human interaction. Basically you just pull an app up on your phone. If you want a Big Mac, you just basically pay for it from right there, and it's waiting for you when you get there. It's starting to see a lot of these jobs where the skill set was while the skill set wasn't necessarily high, it was on the the low side of skill. You're starting to see those jobs be replaced with automation. So no more cashiers. My local hospital has automated receptionists. So when I walk in, it automatically knows who I am. I put my finger on there for biometric scan, and it automatically calls my doctor and lets my doctor know that I'm out in the waiting room.
Yeah, but I also see on the flip side, that now all of a sudden there's a tremendous amount of need of people in the healthcare industry. We don't have enough people working in the healthcare areas, literally from home health aides, from nurses. That we already have a shortage of physicians, a shortage of interim staff there. This shortages going on all over. Oh, there's no such thing as shortages. Really, go to a lot of these hospitals and see how understaffed some of them are in some very key areas. Very
actually, that was kind of like a little joke that my wife and I had. Was about the fact that in the future, one of the jobs that will be readily available will be healthcare practitioners. And the joke to her that her and I used to have was that these millennials aren't going to want to take those jobs because they're not going to want to take care of baby boomers.
Well, they may, but when it comes down to who's going to work and who ain't, people will do what they have to do.
That's the bottom line is exactly what you're saying. There's going to be a high demand for those positions.
Exactly, automotive, and automotive techs and so forth. All that around. You're in the business. This huge wide open markets. Wide open in that job market, just massive. I mean, there are a lot of other industries.
Just a couple weeks ago, Nagon, we were on Ford's website and we went through their careers page, and you just go over there and look at the sheer amount of jobs that are already there. That there's just not really enough qualified people to fill them all.
That's exactly correct. I'm looking at states, Oregon, Vermont, and places like that don't even have enough people in there to fill all the jobs that they have. So they're offering people tens of thousands of dollars, damn near $10,000 to walk into their states. Nobody's talking about it. Oh, you got a job.
Wait. I'm sorry. Say that again.
Did you hear me? I'll repeat it one more time. States like Vermont.
No, I'm just for the people up high up in the stands.
Yeah. So you have states like Vermont and so forth that don't have enough people in the state to even fill their state and just regular local jobs that they have. So you have the state looking to hire people, state jobs, good jobs, where you get pensions and benefits and all that. They're paying you $10,000 just to move into the state, just to work. And people are telling you, oh, get the Spanish out of here, get these Muslims out of here, get everybody else out of here, because Lord have mercy, they're killing us. And you have states that are understaffed, working on skeleton staffs, and they have the money. So we're talking about all these different kind of issues going on. Folks just don't really know what's happening. I'm here in this country, so all of this, a lot of this horror stuff that we're talking is being ginned up by a certain kind of crew that's out there. The reality in America is there's a lot of opportunities around it, just not being distributed properly, and the amount of ignorance and lack of information that's really going on as far as where the jobs are is rather frightening. But the market is still wide open. But very wealthy people are trying to control the matrix. So they're trying to keep a lot of the wealth really in the hands and movement of just a few people, which is pretty evil, which I see going on right now. I think there's a fairly evil cabal going down right now That's doing the nation a disservice. When I can look at various states and them being understaffed, and then people saying, "Oh, we don't have enough jobs," it boggles the mind.
Hey, fellas.
Hey, Jack, jump in there.
Can I jump in here and just go over like 2 or 3 charts real quick? It's not going to be long. I know I say that a lot, but it's really not.
I think Jack was trying to get in before, but
okay, go for it.
Pull your charts up. Pull your charts up, and
I'm ready whenever you are. Go for it, Jack.
Yeah, let's go.
Well, I was gonna discuss like I understand what you're saying it going, but we had these corporations trying to reduce their bottom line, right? By 30-40%, and then they're able to do that and still increase productivity. You don't think it's like a no-brainer to go ahead and reduce costs? Because another thing too, I saw another video right today of this robot, and it literally was running, doing backflips, and it was stocking shelves, and I'm just like, that's somebody's job. That's a police officer or something like that. So it's like, or that's somebody working in a warehouse or something. So it's like, I think these corporations want to reduce costs or labor costs.
I think that they can reduce labor costs where they are, but then there's certain kind of jobs right now that you really can't replace with robotics as of yet. Our robotics games is not there. It's not going to be there for a while. So we can even talk about jobs doing warehouse jobs, but let's sit down here and look at a warehouse that might have 2 or 3 100,000 spaces or whatever that need to be stacked and packed. You don't have enough machines. You know how many machines you'd have to have in there to do that type of work. So
look at Amazon's warehouse. Look at Amazon's warehouse. They have no people in there. It's all robots.
Which one you talking about? And I'm just saying there are a lot of warehouses right now that you can say Amazon may have that, but hey, I know a brother here right now. It's one of my nephew's friends who just came up, and he's working at a warehouse in New York City, and there is no robots in there. It's a bunch of guys, and he's making about $14 an hour. He's just coming up from Alabama.
But that's going to come to.
That may come to an end. That's going to come to an end. But there are going to be other opportunities that are going to open up because of that. So I'm just saying. Like I said, robotics, or robotics are definitely going to be a big part of industry. It's been there. Robotics has been a big part of it. Many industries have developed, the automotive industry and so forth. We've got a lot of robotics in there, but damn, it's still, look at the automotive industry. It's still an area where they need a lot of people. Healthcare.
Well, 2 points.
Need a lot of people.
I just want to make 2 points off of what Nagon is saying. 2 points here, real quick. One is a perfect example of what he's talking about with Tesla. Now, what Tesla ended up having to do was hire more humans because the way that they planned out their automated assembly plants wasn't efficient enough to actually meet the demands needed for Model 3. So they actually had to build another facility outside and hire a bunch of people to do just wrench and put them together. Right. So there's still some work to be done with regards to optimizing automated processes in order to be able to efficiently scale up manufacturing. They're not there yet with regards to some industries. In others, totally. Other industries, it's built on that. Okay, so it really depends on the kind of industry that we're talking about. And the other thing with regards, go ahead, Mike.
No, go right ahead. You got 2 points, so finish the second point.
Well, I was going to say, just the other point is that what Carl is saying is that, yeah, in some of these warehouses, those jobs exist. At a certain point here in the not too distant future, dude, they're going to go the efficiency route. They're going to replace some people and implement something else. And all I'm saying is that those people who get replaced are going to have to replace that skill set with a new skill set to get them a new job in the new paradigm. Those are the only 2 points I had to make.
Yeah,
no, I was just gonna say before you had to go out and walk and go find your bird scooter. Now they're talking about delivering bird scooters to you. So they're making it so much easier for you. They're taking out the middleman that was there before. A lot of these jobs are going to be pookie jobs. In the next 10 or 15 years, where
Well, like I said, we could break this thing down to the safest jobs in the future. Mental health, and substance abuse, and social and social workers. We're going to be looking at occupational therapists, dietitians, and nutritionists, physicians and surgeons, You're gonna have, you're gonna have clergy, which is still gonna be very, very important. Technical people in the automotive industry and in the various technical building trades.
Electrical
So
and mechanical engineers.
so there's going to be a lot of opportunity for a lot of jobs to be around. So the machines are going to be doing a lot of work, but they're not going to knock out a lot of shit that's going to be out here. That's going to be hiring millions of people. Just building stuff and being much more technical. There's going to be a lot going on. The healthcare industry industry and so forth. Massive. Anyway, go ahead.
Yeah, I agree with. I have a friend who used to be an auto mechanic and finished his undergrad in EE in electrical engineering, and ended up getting a job at Intel working as a lithography technician on the fabrication plant over in Arizona. So that sort of transition of skills, because he was a mechanic and he was good at working with his hands, it enabled him to be inside of a chip fabrication plant over in the West Coast out in Arizona, manufacturing these Intel processors.
Mm-hmm.
Yeah,
we don't have a lot of brothers who are actually in that area.
So
and that's what I mean, man. It's like there's gonna be people who are gonna have skill sets that are gonna directly correlate and transfer over into these new industries.
Yep. And seriously, a lot of jobs that are going to come around with taking care of the elderly and building a lot of construction trades and so forth. A lot of this stuff is still going to be rather massive. I know we have trucking and all that looks like it's going to be fully automated, but we're not going to have fully AI highways for the next 20 years. So still trucking and these kind of things are still going to be in there. It's still going to be there. That's just not going to remove it all. That's going to take a while before all that goes away. So there's going to be a lot of jobs around, and a lot of industries are going to grow. So some stuff is going to have to go by way of the Hershey Highway. Going to be flushed away, as they should. No problem. We've been seeing that for a long time. But yet, other things are. We see the telephone operator. We thought was dead and gone, and with automation and all this, but we still live voices on the phone. You know what I mean? I don't know what to tell you.
Now, and the other thing too is that now there's also transition periods, right? Because they don't happen overnight.
Right. Exactly.
So there's transition periods, and really we're always in a constant transitional period if you really want to get technical about it, right? However, there's just going to be the rapid rate at which transition is going to happen versus whether it's just going to happen slowly, and all points indicate that it's going to actually happen relatively rapidly with a lot of the technology being deployed.
Yeah, but I think the whole hype of there's going to be this giant mass liquidation of workers through automation quickly. I think that's quite, from what I'm seeing, that's quite a bit overblown.
Fellas,
hey,
can I box?
We only got.
Go ahead, Mike.
We got about 10 minutes left. We got about 10 minutes left before the stream ends. Well, give the last 10 minutes to Dollar Will to do his charts.
Okay, and probably won't even take that, but it is important enough for me to buffalo my way in here and say, hey, give me this time. it's not long. We're in a state of, come on, there you go. You guys see this?
Yeah, we see it.
Okay, good. Okay, we're looking here at the Dow, and we don't need to go all out. We know the deal. This is January high. This is the high we just made, and what we're looking at is this low here. We're trying to see if we're going to make a new low, and I'm using this little purple moving average here as sort of like my my support. Okay, you can think of it as that. All right. So this big red candlestick is 1 week. We're looking at a weekly chart. So at this rate, and we got the stochastic down here, and if you definitely see it going south until you see it cross back above itself, the slower line, the bias is to the downside. All right. If we make a lower low that will change all of those automated computers, those trading bots. They're gonna take a negative bias because we will have had what's called an outside move. We would have made a higher high right here, and if we come lower, we will have made a lower low, and that's an outside move. It will have engulfed this low and high, and if this was a candlestick, we would call it a bearish engulfing candlestick. So technically, all that's needed to change the whole industry's bias and turn us from bull to bear is for this price to come down to here, and it could do it in maybe a week and a half. So next week, you want to be watching the Dow for the lowest point between January to this recent high if we make a lower low. So that's the Dow. Last week, we were looking at the Russell 2000. We're just going to look at this final leg here from February of 2016. This is the whole run from 2009, okay? I would count this as 1, 2, 3, 4, 5. What's troubling is that what I'm calling wave 5, what's troubling here is we broke this trend line. Now, can't say absolutely that we're reversing, but I wouldn't trust this. I wouldn't bet against it. This is one of those situations where I would wait for the market to turn around and prove to me that it was going positive. What is also concerning is, let me go to a daily. We fell straight down. In Elliott wave theory, the reversals are, or counter trend, meaning downtrends, they do an ABC move. This is just one big move. There's no green in here showing that there's a B wave. So an ABC move would be a leg down, a B leg up, and then the final leg down for a C. This looks like all one big A move. So that means we got a long way to go down. I mean, this doesn't, I'm not buying, even if it starts to come back. My mind is telling me that's just the B wave. So this is looking pretty ugly. Pretty ugly. This could be it. This could be that. Go ahead.
I just want to ask you a question. Have you been following the Fed funds rate?
You mean the interest rate?
Fed funds interest rate, yeah.
Yeah. Yeah. Do I look at that as a tail? I look at it. I look at all things, but the rate is going up. That's slowing down businesses from taking out loans to grow.
Well, it's slowing a lot of things down, and when you start to see those rates starting to go up, and then we start seeing interest rates starting to climb, just because the Fed funds rate goes up. It's going to increase interest rates all the way around. A lot of money is going to start getting swept out of the stock market, and then they're going to start moving into the bond market and so forth, into those more data instruments. And that's why we're seeing some of the drops in some of the stock evaluations. And what's going to turn that around? What's going to stop that? We got to bring the rates down. I don't know if we're going to be able to do that. Right. I think we're in a pretty bad period right now. I think this shit has begun. That's kind of what I'm looking at. I don't know how quickly we can bring these rates down. But,
let me finish running through this.
Go ahead.
You're right. This could be it. But when I look at the charts, I try to make myself go by what the chart is saying and not like talk myself into seeing something.
Okay.
That's. I mean, no. I'm not. I'm glad that you asked that, because that is a discipline you have to do when you read in the charts. When you have all this fundamental data, you will talk it in. You convince yourself of what you're seeing. And so you have to, when you're trying to do technical analysis, you really have to fight against that, to just, look and see what it is. And what here it looks like one big funky A. And it says to me that if we were really going to come short of this, where's the January? This is the January high. Okay. So this is the low. That's it. That we're in that, and this is the Russell 2000 small cap. Man, does it look to you like we can get here next week?
Mm-hmm.
If we did all this damage, come on. If we did all this damage this week, a lot of this damage this week, we can do this next week, and this thing ain't slowing down. So pay attention to that. Also, what we got here is my goodness. I don't want to know why they want me to keep signing in. I'll move the thing out the way.
Password there, Dollar Will.
You say what? Oh,
what's your password?
Oh, okay. Big money grip. Okay. This is just. This is something if everybody should just keep put in the chart somewhere and keep watching it. This is long support line for Exxon, largest oil company in the world. I am bullish the dollar, and I believe this thing has to die. It's got to die. It's not dying yet, but I just keep that line in the sand there. And we got this big red candlestick here. It has not overtaken this previous one, but just watch it. I can put a little trend line here to watch. But everybody's going to be watching this Exxon, because if Exxon takes out this support, that's gonna ring all over the world. Every oil company is gonna bite it. So watch. Keep your eye on that. The dollar has not really made a new high yet, but it made a little high here, but it has not taken this out. But all this activity around this support line, it's gonna go through. I maintain we're going higher. We got stochastic pointing higher. This is going higher. And when that happens, all hell is going to break loose. So we don't have anything definitive this week, but the setups are pretty clear. We got support here on the Dow. We got this broken trend line on this broken trend line on the small caps and Exxon we're looking at. That's all we got. But this is not the time to hodl. For me, I don't have no money in any of this. I'm in a fund that's shorting gold, because I am actually have real money placed on the dollar chart going north, like I pointed out, and that gold is going to tumble. And that's also going to be negative to Exxon. So when the story becomes that, gold took a big dive, no dollar will is somewhere smiling. And also, I didn't bring up Bitcoin. Bitcoin has the same kind of thing. It's right on the daggone support area. And so next week, we should have a lot of things. In the next 2 weeks, it looks for certain over the next 2 weeks, we should have something, a lot of conclusive moves that's gonna end this sideways suspense, and everything's gonna look clear. It may not be a lot of people might not be happy, but we will have certainty in the direction of the market.
Okay,
keep an eye on the rates. Keep an eye on it. Go ahead.
You said big money grip. Is that all caps or low? Caps?
Big money grip.
It's 0000000 like
yeah.
I just want to take 30 seconds and wish Lionel a happy birthday. Today's his birthday, so everybody in the chat.
Happy birthday, Lionel!
Happy birthday, Lionel!
Dude. Happy birthday, man!
Man, he getting old. He getting old now.
I'm gonna take the KODs, man. KODs.
Yeah, you know the edges of that player card getting frayed. When you get a little older, man. You gotta use it or lose it, man.
What's up?
No, that's pretty good. I mean, you guys, pretty good little show here, gentlemen. I have to say.
Thanks, sir.
Sir. Nice work there, Dollar. Well, I do think that we're looking at some
Salute to
rather
you as well,
interesting
man.
trends
Thank you.
going on right now. As I was thinking, just looking at the Dow taking the hits that it was taking over this past week, and I'm been taking a close look at the leading economic indicators, which to me seem to be trending downwards. I think we're going to have a little bit of an issue. Housing starts and so forth have been starting to slow down because
the interest rate is killing
because
that. You can't
because
qualify
that's another
for the
function
mortgage.
because that's another function of interest rates.
Yeah.
But I've been looking at the Fed funds, and that's up to 2.25, and the board of governors there at the FRB, really wanted this thing to be at 2, and now it's at 2.25, which is a little higher than they wanted to go. I don't know, man. Don't know.
So Fed funds is the rate the banks charge each other?
Yes.
There you go. Just clarify that for everybody.
Yeah.
So what number is a bad number? Like if it gets to a certain
interest rates?
Yeah.
I think the bad number we're going to be looking at about 6.5% on the overall interest rates. I think we start hitting 6 to 7. They're going to be opening up major booty holes. So I think we're going to have a real problem with that.
Yeah, it's bad. It's bad now.
That was during the recession.
That's been going on these hangouts for a while now. So.
Yeah, it's bad.
Say that again.
Fairly recently, man.
What's that? I didn't hear you guys.
No. We'll talk about that offline. We'll talk about that offline.
Let's do that.
Yeah, it's pretty bad now because when the rate is moving higher. I mean, you're a real estate person, Jack. So the number of people that can qualify for that mortgage, that affects them.
People. I'm seeing people are qualifying, but they ain't qualifying for the right loans right now.
Right. They can't get what they want. They can't get what they could have qualified for, say, 6 months ago. And then you got the homeowners that don't want to lower the price.
The rates are. I mean, I'm definitely going to. The market right now that I'm looking at on the housing is actually looking bubblicious.
Yes,
it's got bubbleliciousness about it. So that's going to be a little bit problematic. And I do think we're going to see some we're going to be drinking some funky cold Medinas shortly because I think this is getting ready to get very live.
I wouldn't buy a house with your money.
Well, it all depends. I mean, if you're going to buy a house that you can at a very cheap rate and fix it up and potentially keep it for a long-term hold, and then wait for the for all the garbage to clear out when this next hit comes, and then hold it for a few years and then come up, you make some money down the line. But I think
that would be the only way. It would have to be
the quick flipping game and all that.
Yeah, it would have to be an auction or foreclosure or something like that. Like you said, get it really cheap.
Yeah, it would have to be on some kind of, and you got to hold it. The flip game, I think, is getting ready to come to see some hard times. It depends on what areas of the country you're in, but still, if you're going to buy a house, I wouldn't buy one in one of these jacked up markets. I'd be out somewhere in New Mexico, Albuquerque, or something like that. Maybe buying a real cheap piece of property and buying a house out there if you want to play that game. But New York and all this kind of stuff, I don't know. Anyway, go ahead.
Hey, Nagon, what do you see the bubble popping around Q4, Q1?
Hard to say because I stick really to just looking at the interest rates. I'm looking at this. For me, I had all this complexity. I've made it very simple, and I ain't been wrong by looking at the Fed funds rate. I ain't been wrong yet. And looking at that simplistically, what are the banks are lending each other? That's the key right there. Not good. So Q4 could be hard to say, but it's going to be soon. I don't want to exactly say when, but I would say, listen, it's not high noon. It's not high noon, but it damn sure is a quarter to 12. You know what I'm talking about? So,
hey, Nagon, you have a question in the chat. Someone's directing a question to you.
Hang on a second.
Hold on 1 second. What about Abdullah bin Bobby? He said, what about buying a house to rent out?
Buying a house to rent? Yeah, you can do that because if you buy a house,
Airbnb, man.
If you buy a house, and you get it at a decent rate, and at least you could at least have someone to come in and to cover your mortgage for you. Maybe you can get a little bit extra on top of that, because it's going to be a renter's market for sure. In that case, when people are not going to be buying, that could be a good idea for that reason. So I wouldn't say that wouldn't be a bad idea, but it all depends on the ground floor you get in on. You don't want to have a huge, massive mortgage on that house and then try to get people in to pay for it. That could be a little bit problematic as well. So getting at a decent price, and then I think it's a fairly good idea if you could do that. Get the house at a decent price. Don't get juiced, because as the market drops, the worse you look on the kind of bath you're taking on that house as well. So, and the longer hold you're gonna have it. So,
these houses, I think these houses no, the last time we dropped, the 2009 drop, it took a little over 2 years, something like that. I see no reason why this won't take about 2-3 years. Now, in that time period, we could be back to mid 1990s house prices.
Okay,
this gonna be nasty.
So somebody's asked me, Abdullah, he's asked me, what do you consider a huge mortgage? That all depends on the wealth and the worthiness of the individual who's buying it. So that's a relative question. But I would think anything $2,500 a month and over, as far as a mortgage payment, it's just pretty high. But anyway, what were you saying? Complex, you were saying something you were saying something there?
I was saying just like that, and the market, like where the house would be.
I couldn't hear. I was talking to him, so you were kind of talking over. I didn't hear what you said.
Oh no! When he asked about that, I was just saying, and also like maybe like the market where the house would be. Considering
it all depends.
What a large mortgage is, yeah.
Yeah, it all depends. So much depends on the area that you're in. New York is one thing. If you're if you're in California, somewhere in Oxnard or something like that, it could be a little bit different. If you're somewhere in West Virginia, a whole different game. You know what I'm saying? So
I say when you're looking at those homes and they show you the title history, and they show you the transactions when the house was bought, and when there was a transaction around in the mid 90s, you find an area and you look at what those homes were going for in the mid 90s. That's probably where we're going to end up. These houses, they're going to lose 30-40% easy.
Well, we got to see. They ran the market up again after the crash. They ran it up again too quick, because I saw a lot of stuff out there in Arizona and so forth. They were really trying to run those housing prices up a lot, and people are going to get stuck again. If you ask me, and still a lot of stuff wasn't really washed out from the 2008 kind of crash. So I think this is going to be the big flushing coming down here. So this is going to be, this is going to be very live, man. It's going to be very live. You're going to have to be smart. People now getting into this game, you have to be smart and very strategic playing around in this market now. You have to be smart about it.
And what
making dumb choices or emotional moves are going to are going to work you over. So you're gonna have to be very strategic. You have to watch the fundamentals of the market now. So the smarter people, the people who are more intelligent, who are looking at the fundamentals of the market, are going to do better in this, as opposed to the emotional jackboners out here who are getting ready to get fucked over.
But anyway, we got a fundamental versus technical. I think the technical folks gonna win.
Well, the fundamentals and the technical, I say that's the same, because the fundamentals are the technical. You have to look at what's really working this market. And you have to look at certain kind of things, like what's the debt to equity ratios and these types of things that makes sense.
But let me say this before we lose air. I do remember in 2009 when the market quote unquote crashed. We had so many homes in foreclosure that slows down the new home sales, because you got all this inventory, excess inventory, all these great deals, and that makes like new homes hard to sell. So it's like the people with money at the end of the game, when there's blood in the streets, they're going to be able to buy a McMansion.
Well. See, this is the thing right now. All right, for those who are watching charts and are looking at the fundamentals, you guys are going to win. Those who are accumulating large cash positions, keeping most of their assets in cash, those are your champions. You're the champs. Few of you are doing it. Those who are accumulating and holding a cash position right now are the champions. Because when this bitch drops, you're going to be sitting there with a 12-inch, you know what, walking around, swinging that bad boy around, and you're going to have a chance to do a lot of shit, do a lot of damage.
Tricking.
So,
tricking for houses. Tricking for houses.
I'm tricking. That's what's going to go down. Those who are accumulating a cash position, that's your champion right now. Those are your champs right now. Right now. So keep accumulating cash. Go ahead.
Hey, Nagon, can you take us out with your mantra?
Oh, get your mind right. Get your money right. Money right. Get your body right. Gentlemen, hear this out real close. Keep your overhead low. Ooh. Your savings high. And, for a good measure, keep that succubus behind you at all times. But anyway, that succubus away from you. Don't take on no female trying to take your money out. But keep your cash high right now. Anyway, those are cash. Go ahead.
Hey, thanks for that, Nagon. We're gonna close out. We're past time. So, Jedi, I wish we can answer your question, but we need to close out. Thank you all for joining us. We do have another hangout tomorrow for military talk, Black military talk, doing military business in Africa, as well as United States brothers who were former U.S. forces should actually participate in this. We need to pick your brain on some of the business aspects of just military and national security. So, thank you all. Have a good night.
Night.